So, hello friends, this is Vivek Agarwal, convener ACCA Study Circle, welcoming you for the second day of the bank audit session on a very important topic. Number one being advances and number two being Excel. And we have the two of the best speakers from India. On review of advance, we can think of no other one and none other than Ismail B. Sonawalla ji. And on Excel, a speaker who has been speaking for last 10 years in our branch audit, bank branch audit session, Mr. D.S. Premnath. So we welcome you all, and I would request Priyank Singhi to take the proceeding forward from here. Committee member Priyank Singhi.
Yes, thank you so much, Bhaiya. Just give me one moment. Sorry. Am I audible, Bhaiya?
Yeah, you are audible, Priyank, but your video is not there.
Yeah, I have switched on the video. It's just coming.
No issue. Continue.
Yeah, the motto is you can hear the motto, right?
No, we are not able to hear the motto.
आप एक बार screen share करो ना. अच्छा,
Sure.
sorry, just one second. एक second, ना. Audible?
No. Stop the sharing, Priyank.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमानः निर्विमानः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूना कश्चनाद्यति कश्चन एतद्द्वैता 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 एतद्.
Thank you, friends. Priyank, requesting you to formally introduce the speaker, sir.
Yes. Good evening, everyone. Good evening, sir. So I'll just read out the brief profile of CA Ismail Sonawalla ji. CA Ismail B. Sonawalla is based in Mumbai and is a practicing chartered accountant since more than 35 years. He is the proprietor of Messrs. Sonawalla and Associates and the managing partner of Messrs. RMI and Associates Chartered Accountants. Since the last 24 years, he has been a regular faculty at various lectures and seminars being organized by various regional councils of the institute, its branches and study circles, and has delivered more than 155 lectures all over India on various topics concerning accounting and auditing standards, audits of commercial and cooperative banks, credit societies, etc. He has more than 40 years of audit experience of nationalized banks, private sector banks, and cooperative banks. He has finalized more than 175 bank branch audits of all major nationalized and cooperative banks. Since the last 6 years, he has also been invited to give lectures by various branches of Southern India Regional Council. He has been a regular contributor to WIRC's reference manual since its inception, more than 18 years ago. He has also contributed articles on various topics in our institute journal, booklets, as well as other publications. Besides this, he is also very active in social activities. He is the chairman of the Diamond Jubilee Trust, which operates all over India. With this, I hand over the proceedings to you, sir, and look forward to learning from you. Thank you so much.
Thank you, Priyank.
Thank you, Vivek. Thank you, Priyank. I am audible?
Yes, sir.
Okay. Okay. One of the disadvantages, major disadvantages of pandemic has been that from live show, we have become speakers who speak on Zoom, and I'm very uncomfortable speaking on Zoom because unless I have people in front of me, I can see their reactions. I am not able to understand whether the audience is able to understand me or not. So for that reason, what I have done is that I've told all my office staff to sit with me in the same meeting room that from where I'm delivering the lecture. So at least I have got an audience to see their reaction. As Vivek said, the allotment letters have still not come. And the other issue that is that branches and banks have been merged. So number of branches, the number of audits are going to go down. I'm still surprised why the commercial banks or the national banks are still giving audits to the chartered accountants. The reason being that all the private sector banks, none of them have got branch audits. They can sit in the head office. All details are available there and they can do the audit. So the time is not far when even the commercial banks, the nationalized banks will decide to go that way. Until and unless we chartered accountants are able to add value in the branch audits, I think the situation that has been going on for the last so many years will only accelerate as far as the branch audits are concerned. I was just going through the material while preparing my lecture, and I realized that in the last 2 quarters of this financial year, RBI has reported that there have been more than 4,000 banking frauds involving 36,000 crore rupees. It means that each fraud on an average is 9 crore rupees. It means that frauds are still taking place in the bank despite the pandemic, and these are the ones which have been reported. We don't know how many such frauds will be there which has not been reported, which has not been detected. If you feel that in the branch frauds are not taking place, I think we are very sadly mistaken. And when I go through my stories, I will tell you how we have been able to detect these frauds. Over the years, I have collected about 32 practical stories. These are not stories which I have taken from the books. These are the ones which I have faced. And during the course of the next 1.5 hours, I will try to share some of them. Of course, I will not be able to share all of them because there will be no time to share that, but I will share some of them which are relevant or at least which are more important here. There is an RBI site, www.rbi.org. on which all the circulars are available. Please read those circulars because those are the important ones on basis of which you are going to do the audit. My very first story is about the branch managers. You should be aware that the branch managers are very, very well experienced people who have become branch managers. And when you get the bank audit, branch audit, they are going to call you up. They are going to call up the principal partner or the person who is going to attend the audit, and they are going to speak to them. And one such call came to me about 4 years back. She was a lady branch manager right in Mumbai, spoke to me about the audit that I'm going to start, discreetly asked me how many years I've been doing the audit, etc., etc. And then we went for the audit. I have got a habit of taking my own review when the bank audit is completed. So after the audit was completed, and after I had signed the report, the time when the branch manager is now not fearing that I'll not give the report, I asked her one question. Please let me know how my audit was. And the thing she shared with me was really surprising. We took about 18 man days to complete that audit. She told me that, sir, when I spoke to you on the phone, I realized that you are so experienced that I can't fool you. So I had to give all the details that you had asked for, and I know you are going to ask the details. Yes, in this same branch, we had got at the end of the audit, the assistant branch manager suspended. And I'll tell you what that story was. But she said that last year, when I spoke to the auditor, I realized that he doesn't have any experience. And over and above that, she sent his assistant to do the audit. As a result, during the audit, I gave them only those papers which I wanted to be given to them and not what they had to audit. And in about 2 or 3 days, 4 man days time, I got my report signed. What does this signify? If you go for an audit without being prepared, without knowing what audit has to be done, the branch managers will just wind up the work for you, show you only those things, and you are back. And finally, when any issue comes up, who will be responsible? It is the chartered accountant who has signed the report. We still have time before the bank audit starts. Please read the circulars. Please read the papers that you have to do before you go for the bank audit. Another practical thing which I have learned in bank audit is that we chartered accountants are afraid of anything that is foreign. Foreign exchange, advances, foreign bill purchase, foreign bill discounting, non-funded advances, especially foreign. When these things are foreign to us, we have not read them or we don't know, what we do is that when we go for the audit, we hardly devote time to any of these things. But the fact is that we have to certify them. So what do? We go to on the last day, the last 1 or 2 hours, we will go to that department and ask them some questions. Is everything all right? Naturally, the staff will say everything is all right. No staff is going to tell you that things are not all right. You are supposed to find out. He's not supposed to tell you. Is everything balanced? You'll ask the next question. He'll say, yes, sir, everything is balanced. My dear CA, it is a computer age. Everything is balanced by the computer themselves. The staff doesn't do anything. Are there any problems? He'll say, no, sir, there are no problems. Even if there has been fraud, he will not tell you. Why? He's not supposed to tell you. You are supposed to find out. Asking these 3 or 4 questions, you will finally finish off the foreign department, the foreign exchange departments, the foreign bills department, the non-funded advances, etc., etc. And in half a day's time, all those very, very important things are audited and completed. So if there are things in the branch which you are not aware of, this is a book that which is being published by the institute since years. Please go and read it. It is into 2 sections. One is for the central auditors and one is for the branch auditors. Read it, or everything that you need to know about bank audit and all the details, the latest circulars, everything is available in this. And over and above this, you have got the ICI helpline. When the audits are going on, our institute will float a helpline on which you can send your questions, and the chartered accountants who are sitting at the other end are supposed to give you the answers in about 24 hours time. This doesn't mean that you can shoot out any questions. First, read it. I have been part of this, and I realized that the CS think that the chartered accountants are supposed to give replies which are available in the papers. And if such a question comes to me, I shoot it back to the chartered accountant. Have you read this? If you are not read it, please don't ask this question. Some more practical suggestions to all of you. We are all very, very familiar with the word sanitize. The most sanitized place in the bank is the branch manager's cabin. What do I mean by sanitize? Sanitize means that if you sit in the branch manager's cabin and you do the audit, no client is going to come there to complain because the chapras is sitting outside, has been told not to send anybody inside. So you will not come to know what is going on. The branch manager sitting inside is also sanitized. So he or she will tell you only exactly what he or she wants to tell you. You will not get the facts out of this. So please don't sit in the branch manager's cabin to do the audit. You're not going to find out anything. And all the stories that I'm going to tell you are something that I have learned sitting outside the branch manager's cabin. Next suggestion, keep your eyes and ears open when you're sitting outside. What do I mean by that? When you're sitting outside, there are customers who are coming, there are staff who are working, there are others who are there coming and complaining or doing things. All those small hints you need to pick up, because those are indicators, like any doctor, to you to diagnose what is going on in the branch. So once you do that, there may be some hints that will come to you. That doesn't mean that there is a fraud, but those hints will come to you based on which you can then do a further detailed checking, and maybe those small hints that come to you will give you some large things that are happening in the branch. And I give you examples of that. Third, make friends with the staff, especially the chaprasi. He is the one who brings in all the files and he knows everything about the branch, what is happening in the branch. And what I do is that when I go and sit outside, I tell the chaprasi, I am very, very fond of tea. During the day, at least serve me tea for 3 or 4 times. Those 3 or 4 times is the time when he is able to come with the tea and talk to me. And believe me, I have found frauds after these discussions with the chaprasis. So make friends with him. This is talking to the people. When you talk to the people, they will respond to you. I will also teach you, I will also tell you how to talk to the papers. You will say, how can we talk to the papers? Yes, I will tell you how to talk to the papers. When you talk to the papers will also tell you many stories. Finally, after you have done all this, remember one thing. Whatever is written is what is documented and what will stand as a proof. We chartered accountants, except the big 4 and the big firms, are very, very lazy about noting down things, documenting things. We go there, we ask verbal questions, we don't get a reply or we get some reply, and then we put in the report that this is what happened. The first thing the branch manager will do will first deny, I have never said this, or this is not the reply I have given. So what do? Very simple. When you go to the branch, anything that you talk to them, any query that you give them, put it down in writing. You say, but sir, this is not possible. It is very, very possible. Take a plain piece of paper, put down the date, put down the name of the branch, put down the query, hand it over to the branch manager or to the staff concerned that this is a query I have given you today. I need a reply in the next 2-3 days before I leave. Everybody has got this mobile phone with a camera. Take a photo of that. Before leaving the branch, we have got all the photographs of all the queries that we have given. Ask the person to whom you have given the query to give you a reply in writing. If he gives, it is fine. If he doesn't give, you have got a documentary evidence saying that you have raised this query and you did not get the reply. After that, the branch manager will not be in a position to deny that this question was being asked to you. So remember, you need to note down your observations. You need to ask the questions. You need to get the replies. And if you don't get it, then only you can, right? You can note down that you did not get this reply. Now there are 2 reports that you need to give. One is the statutory audit report, branch report. The other is the long form audit report. If you find any query and the branch manager will first tell you, sir, do one thing, please put the query in the long form audit report. If it is a serious query, my suggestion is put it in the main audit report and not in the LFAR. I'll explain to you why. Long form audit report in the company's language is a management report, which is read by the central statutory auditors after they finalize the bank audit and they sign the bank audit reports. I mean the bank's report. audited accounts. But the statutory audit report is a report in which the central auditor will write down in a paragraph that I have audited this, these branch auditors by me, and so many branches audited by other chartered accountants. Now, when he writes that statement in the main audit report, he is supposed to read your report before he signs it. And if he ignores your report, it is at his peril that he will ignore your report. That means anything that you state in the main audit report is something that the statutory auditor has to read before he signs the report. So when there are serious queries, and I'll come to certain serious queries, please make it a point to note it down there. The branch manager will tell you, the regional manager will tell you, the zonal manager will tell you, sir, please don't put it in the main audit report. Just tell them one thing, Mr. So-and-so, this is my report, not your report. I am going to report what I feel is appropriate. Let the central statutory auditor decide whether it is valid, not valid, to be included in the report, not to be included. Don't get pestered or don't get afraid of what the branch manager says or the regional manager says or the zonal manager says. And also don't be afraid that you will not get your audit again. Your audits are not decided on this audit, are decided on the quality of the work that you do. So don't be afraid of that. Before you go, of course, you have to train your staff and you have also to prepare an audit program. Now, those who have done the audit last year, they know that the long form audit report format has been modified. And the para in which you have to report about advances is para 1, Roman 1.5. In that, previously, we used to just give questions and answers and details. Now they have modified it to such an extent that if we have verified certain accounts, you need to put down the details, name of the account number, and what has been verified. So today you cannot go to the branch in 2 days, complete the audit and say everything is fine. You need to give details of that. Now, why these details are required in the LFAR? Very simple. If in future there is some fraud that is detected or there is some irregularity detected, and you say that I have verified this account, along with other staff, you will also be held responsible because you have said in your LFAR that you have verified this account. So before putting down any details in that, please be careful that we have done the audit. My simple suggestion is that just don't go to the branch for the sake of doing it and collecting your fees. Go there, do your job sincerely, note it down. And once you have noted down and once your queries are there, even if a fraud comes up, you will be protected because you have documented your things. And I'm going to tell you the very first story of my life where I had done this documentation and how I saved my skin. Let's look at some of the important laws which are applicable. In my paper, which I've given many laws, but the banks are governed by the Banking Regulation Act 1949, which is the mother act. Now, in this act, it is a small act, but many things are given. One very important thing in this is that loans cannot be given against their own shares of the bank. Most of the banks have become public sector companies. Their shares are quoted. So if you are verifying loans against shares, the shares of the same bank cannot be taken as part of the security for giving loans against that. The same section 20 also says that loans to directors, their relatives, the companies they are attached to them, the loans are not allowed to be given. My question to all of you, do you know who are the directors? No. Do you know what are the loans that they have taken? No. Do you know what are their related forms which are there? No. All these answers are no. But the Banking Regulation Act says that you have to report on that. Now, what do? Most of us, 99% of us will just ignore this section 20. And 99% of the time, or probably 100% of the time, the central statutory auditors will not send any query to us. But that does not mean that you have complied with this law. You have violated this. You have not checked it. You are supposed to check it, and you are not even reported. So my suggestion is, put down in your main audit report saying that these details are not available with the branch, and you can put down a query to the branch manager, please give me all these details. It says not available, fine, not available. You put down in your main audit report that this is not available, and I request the statutory auditors, central statutory auditors, to verify it. The next act applicable is the Stamp Act. Now, the Stamp Act of each state has got its own Stamp Act, and there is a central act which is called the Indian Stamp Act. If we are doing the audit of a branch in Kolkata, my sense is there will be a Kolkata Stamp Act which will be applicable. If we are doing an audit of the same bank of a branch in, say, Maharashtra, it will be the Maharashtra Stamp Act which will be applicable. If we are doing the audit of the same bank where the branch is, say, Kerala, Ernakulam, it will be the Kerala Stamp Act. And these acts are all different. So when you get a branch, especially when the branch is outside the state in which you reside, please study the Stamp Act because they are all different. And if something is not available in the State Act, then it is the Master Act, the Central Act, Indian Stamp Act, which will be applicable. One of the clauses is about revenue stamp, which is not in any of the State Act, it is in the Central Act. So you have. The next act is the Limitation Act. This is called the Law of Limitation, the Limitation Act. This law says that if a promissory note or a bill of exchange has been signed on a particular date, the validity of that promissory note or the bill of exchange is 3 years from the date on which it is signed. So, for example, if the promissory note signed for a loan or for a cash at credit is dated 1st January 2018, then the validity of that note is 2018 to 2019, 20, 21. On 1st January 2021, the validity of that promissory note will expire. You will say, well, then what happens? It is not valid. So what do you do? What is the remedy? The remedy is you must have heard about the paper that they take, which is called LAD, ADS, or BCC. What is LAD? Letter of Acknowledgement of Debt, or Acknowledgement of Debt in Security, or Balance Confirmation Certificate. Each and every loan which is sanctioned and where there is a promissory note available, the bank also has to take one of these papers in which it is written that I, the borrower and the guarantor, reconfirm that we have taken this loan. So based from the date of that LAD or the ADS or BCC, the validity of the promissory note or bill of exchange gets extended by another 3 years. That is what the law of limitation says. The next thing is annual closing guidance of the bank vis-a-vis our accounting standards. Each bank will issue closing guidelines, detailed guidelines of how accounts have to be closed and what are the rules to be followed. There are certain rules which have been prescribed under our accounting standards. And sometimes what the closing guidelines say is in contradiction to the accounting standards. I will give an example. Interest on NPA accounts, non-performing accounts, is not to be taken on accrual basis, has to be taken on cash basis. That is what the annual closing guidelines say. That is what even the Reserve Bank of India says. But our accounting standards say that everything has to be on mercantile basis, so that has also to be accounted. What do? Do you change the annual closing guidelines? No, you are not allowed to change that. You have to sign the papers as it is given to you. You cannot even make a single change in any of the papers that is given to you for audit. You have just to audit them. Once you audit them, then whatever you have to say, if it has got financial implications, you have to pass an MOC, memorandum of change, and give details in that. If there is something else which is there, you have to cover up in your main audit report. And in your main audit report, there is one paragraph which says that the accounts have been done on mercantile basis, except the following, which have been provided on cash basis based on the guidelines given by the bank. So one of the things will be this: safe deposit, locker, rent also is taken on cash basis. There will be many other things which are taken on cash basis. You have to mention all those things into your report. Then we have got something called master directions, master circulars issued by the Reserve Bank of India. What is master circulars? And I'm sure those who have done the bank audit will be knowing this. These are circulars which are issued by Reserve Bank of India from time to time, which encompasses all the guidelines that Reserve Bank has set on a particular topic. The last master circulars were issued on 1st July 2015. After that, Reserve Bank has stopped issuing master circulars. Very few master circulars are. They have started something new that is called master directions from January 2016. What is master direction? How it is different from the master circulars? Master directions are something which is updated from time to time. So if a master direction is issued on 1st July 2015, and then something new that has been issued or something changed that has been done on, say, 1st of January 2022, then the master direction will say original master directions of 1st July 2015, updated up to 1st January 2022. So this is like a moving document, master directions on the topics. If there is no master direction issued, then it is the master circulars. Go to the RBI site, all the master circulars, all the master directions will be available there, and these are necessary to be read, because without knowing these circulars, you will not be able to do the audit. Next is the computerized system. Most of the banks use Finacle or they use other packages. You need to get yourself familiarized with them. And from there, you need to know what are the statements that are coming out from these computer systems. You will say you're not familiar, there is no time. No issues. Go to the branch manager or the concerned department, tell them I need the particular system. They will say this statement is not available. Don't worry. Tell them, give me the number of the IT department. I will call them up. The moment you say that, the statement will come out from the computer and they will give it to you. If they are unable to give it, don't stop there. Give a note to them, tell them this is what is required, and then call up the IT department. And you take the command from the IT department saying that this, they will give you the command, give it to the officer concerned, and he will print out that statement for you. My point is that if you are not computer savvy, if you don't know how to operate it, if you don't know their package, don't worry about it. Everything is available. You have just to ask for it, and ask for it in writing. The moment you do it in writing, everything will come out. And at the end of the day, if the statement has not come out and you know that statement is there and they have not given it, simple report it that you have not been given the statement. Everything will be made available to you. So in the bank audit, if you stay a timid person, they are going to fool you. If you ask the questions, they are going to provide, because finally they know that you are going to put things in the final audit report. We will start our verification of advances from the non-funded advances. What is non-funded advances? Non-funded advances are advances in the bank which are given, but no money is paid at that point of time. So this is advances where only a promise is given, money is not given. There is a master circular issued by the Reserve Bank of India, 9th of November 2021, under the heading Guarantees and Acceptances. And there are three types of non-funded advances: guarantee, letter of credit, and co-acceptance. In fact, all three of them are nearly similar. In the banking parlance, a lot of nomenclatures are there, a lot of names are there, which are confusing to us. And as a result, we don't understand what it is. What I'm going to explain to you is in very, very simple layman's languages. All these three papers are simply guarantee given by the bank, whether it is guarantee, whether it is LC, whether it is all co-acceptances. All three are off-balance sheet items. All three do not appear in the balance sheet in the final. They appear as contingent liabilities, and the details of this appear in the notes to accounts which are given in the final accounts. One guidelines that Reserve Bank has given is that no borrower who does not have funded advances in the bank or who is not a regular borrower should be given any ad hoc non-fund businesses advances by the bank. The simple reason being that these are all promises. These promises can get converted into funded advances. When it gets converted into funded advances, the bank will not have any guarantee on no assets available or security available to fulfill the loans that go because of this non-funded becoming funded. And that is why Reserve Bank has said that these facilities should be given only to those people who enjoy credit facilities with the bank. There are two types of, we'll take the first one. There are two types of guarantees, financial guarantee and performance guarantee. In both these guarantees, there are three parties which are involved, and I will use my hand to signify the three or the four parties. Can you see my hand? Please tell me, Mr. Vivek. Mr. Vivek, can you see my hand? Hello. Okay, I've put on the screen here. This is my right hand and this is my left hand. And I'm going to use both these hands to explain to you certain concepts as far as the non-funded is concerned, as far as the bills are concerned, as far as the bill discounting is concerned. So in the financial guarantee, there are three parties which are involved. Understand one, suppose this is Larsen and Toubro, which has been given a contract by the metro company. This is the metro company which has given the contract and to build a metro line. So Larsen and Toubro has got a contract with the metro company to execute and build the metro. So there is Larsen and Toubro's banker which is there. These are the three parties which are involved. When the contract is to be given, metro company has told Larsen and Toubro that we will give you this contract, but suppose if you fail to execute this contract, what is the guarantee that you will not run away? So we need somebody, a third party, to guarantee us, telling us that metro project will be executed by Larsen and Toubro properly as per the contract. So metro company wants a guarantee that L&T will do the contract. L&T goes to its banker telling me that I'm getting this contract. Please issue a guarantee on my behalf to the metro company saying that I'll do the contract properly. The banker of the L&T, Larsen & Toubro, will issue a guarantee to the metro company, and this is called a financial guarantee. Normally, banks are discouraged from giving performance guarantee. This is a financial guarantee. And as far as the branch is concerned, there will be an entry which will pass in the books of the bank, because this now has become a liability on the bank. So on the liability side, you will find the value of the guarantee issued will be recorded in the books of the branch. Now, the branch itself, the bank itself also wants a counter guarantee, that if they have to execute this guarantee, what is the guarantee that Larsen and Toubro will pay them the money? So there is something called counter guarantee. And that counter guarantee is taken by the bank from Larsen and Toubro. And since this is an asset, as far as the bank is concerned, it will be recorded on the asset side. So normally when you do the bank audit, you will find that on the liability side, you will get what is called guarantee issued. And on the asset side, you will find counter guarantee taken. These are the two things that are there. Once the guarantees are over, the papers come back, both the entries will be cleared out. But as far as the final accounts are concerned, none of these entries will appear in the balance sheet. It will all go, as I said earlier, into the contingent liability columns and into the notes to accounts. Performance guarantees, as I told you, Reserve Bank discourages banks to give performance guarantee. Now, suppose L&T does not execute this contract properly, the metro company will tell the banker that L&T has failed and kindly pay me this damages. When this is done, it is called invocation of guarantee. When guarantee is invoked, this non-funded advance given by the bank of Larsen and Toubro will get converted into a funded advance. Now I'll go one step further into an IRAC norm, which is of course not my topic, but just to tell you that this advance, normally when an advance is given, it does not become, it is a standard asset. It is not a non-standard asset, but as far as this is concerned, it is due and overdue on the same day. That means if it is not cleared within 90 days, this will become an NP account. So this funded advance, this advance, which was a non-funded advance, when it gets invoked, it becomes due and overdue on the same day, and IRAC norms start applying on the 90th of day. The next item is letter of credit. This also is a guarantee. Same like the guarantee that we spoke earlier. But now there are four parties which are involved. It is Larsen and Toubro, the banker of Larsen and Toubro, the party that is taking goods from them, and the banker of that. So we'll call this seller and we'll call this buyer. We'll call this seller's banker and we'll call this buyer's banker. Okay, now there are four parties involved. The seller wants to sell the goods to the buyer and the buyer wants to buy the goods. So these two parties are there. But the seller is not sure whether the buyer will pay the money as far as the goods are concerned. So the buyer tells the seller, please go to your banker and get a letter, credit letter issued by him, which is called letter of credit, which is again a guarantee, which says that if the buyer, sorry, he will go to this buyer's banker. If the buyer fails to pay the money, the seller will be able to encash this letter of credit. So the buyer goes to his banker saying, I'm going to buy the goods from the seller. Please issue me a letter. This is called LC. This is again a non-funded advance. Again, there will be a letter of credit issued and a counter letter which will be taken by the bank from them. If after the goods are supplied, the buyer fails to make the payment to the seller and the banker will devolve the LC. And when this LC is devolved, this non-funded advance becomes a funded advance. It is due and overdue on the same day. And so in 90 days, if it is not cleared, it will become an NP account. So that is called devolvement of LC, which becomes a funded advance. Now there is a third item, which is the co-acceptances. Again, this is a guarantee. What is co-acceptance? Seller, seller's banker, buyer, buyer's banker, the same four parties. The seller is selling the goods to the buyer. The goods have gone to the buyer. The papers have been sent to the buyer. The seller says that yes, you will make me the payment after 60 days, 90 days, but I want somebody else also to guarantee, saying that if you fail, then who will make the payment to me? So this buyer, after he gets all the papers, will sign on it that I'll make the payment after 60 days or 90 days. He goes to his banker, tells him, please co-accept this bill which I have signed. So the banker of the buyer will also sign on the paper, and the papers will be then sent to the seller's banker. This is called co-acceptance. If on the due date, the buyer fails to make the payment to the seller through their bankers, the seller will again invoke the co-acceptance, and this non-funded advance will now become a funded advance. So in short, all these three advances are only promises. No cash is given, no money is given, no funds are given. But if the parties fail to honor the guarantee that has been given, the non-funded advance becomes a funded advance. Now let's come to funded advances. We have already spoken about non-funded advances. Let's speak about the funded advances. Funded advances is one where actual money is given, the funds are given, and that is why it is called funded advances. And there are different types of funded advances. We will look into what are those funded advances. There is one depository which has been instituted by the Reserve Bank of India called Central Repository of Information on Large Credits, CRILC, for all advances above 5 crore rupees. Banks are mandated to give details of the loans, about all the loans that they have given, all the advances they have given more than 5 crore rupees to this repository. For advances below 5 crore rupees, there is a central fraud registry also maintained by the Reserve Bank of India, in which the data have to be reported by the bank. So whether it is a small advance or it is a big advance, the details are to be given. And in that, all the details of the advances are centralized and are available to the bank. Advances are on geography basis. If both the parties involved are in India, it is called inland advance. If one of the parties is outside India, it is called a foreign advance. It may be an export, it may be an import. The importer is sitting in India, the person who is exporting the goods is sitting outside India. So that is what the advance is. All the rules of advances for local, national, or international are one and the same. Don't be afraid of the foreign advances, except that there are certain rules of FEMA, or there are certain rules of when the money has to come. The Reserve Bank is more strict about money coming from outside, the currency in which it will come, the time by which the loan has to be cleared. Except for that, both the advances, whether it is local or whether it is a foreign advance, the rules of verification and checking is one and the same. Then comes secured and unsecured based on security. What is secured? When a tangible security is offered against an advance, stock, book debts, FDs, LIC policies, etc., they are all secured. If no such security is offered, only a personal guarantee is given, it is called an unsecured advance, which is to be given. There are rules which have been prescribed by the Reserve Bank of India for secured and unsecured advances. Then there is something called priority sector. The Reserve Bank of India has got a list of people or sectors which are considered as priorities, simply stating that these are the people to whom loans have to be given on priority basis. Agricultural loans, MSME loans, loans to farmers, etc., housing loans, these are all priority sector. Every bank on a whole has to give at least 40% of the loans for priority sector, and all other sectors are called non-priority sectors. Now, all these classifications that I said to you in the last 10 minutes, the chart of the loan which comes to you for verification will have all these classifications: secured, unsecured, priority sector or not a priority sector, its value of security, whether there is a guarantee or not, what is the value of the security, all that big chart that comes, the loan chart that comes, which you have to verify, all these details will be made available in that chart. Now, let's look at the type of advances that you're going to verify, including foreign advances. Demand loan, term loan. Banks are famous for issuing various types of nomenclatures, whether it is funded advance or non-funded advances, whether it is loans or guarantees or whatever it is. There are so many terminologies that we all get confused. What I'm explaining to you is the simple terminologies. In the book, you will find or in the bank, you will find other terminologies, but the basics will be the same. Demand loan is a loan which is not repayable on demand. And term loan is a loan which can be recalled on demand. Now, I'll tell you what is the difference. Demand loan is like a term loan is like a demand loan. The difference is, as far as the bank is concerned, all loans which are to be repaid in 36 months are called demand loans. All loans which are to be repaid in more than 36 months are called term loans. Generally, demand loans are given for stock and book debts, and for those purposes. Term loans are given for housing and other purposes which are longer term, which has to be repaid in more than or for immovable property. So that is the difference between demand and term loans. As far as their other details are concerned, are one and the same. Then we come to cash credit and overdraft. In the banking sector, there is one type of loan, cash credit and overdraft. Once it is given to you, it is never recalled during your lifetime. You have not to repay this loan, provided certain terms and conditions are fulfilled, provided you get it renewed, provided you are regular in your repayment, provided all those terms and conditions, all your stock statements are given. As long as you comply with the terms and conditions of these two advances, you have never to repay the principal amount back to the bank during your lifetime. Now, why two terms are there, cash credit and overdraft? I don't know. Don't ask me, ask the bankers who have made this. Cash credit is given against stock and book debts. If anything that is given on securities which are other than cash, stock and book debts, it is called overdraft. In cash credit, if something more is given over and above the sanction limit, it is called temporary over limit, TOL. TOL is as secured as a cash credit as long as the amount is within the overall security available. Even in overdraft, the same things, temporary over limit is given, which is also secured. But in overdraft, there can be something which is also called unsecured overdraft, which is called TOD, temporary overdraft. Temporary overdrafts are not covered by any securities. They are given on personal guarantees, and those are repayable generally within 20 days or 30 days. The very good example of unsecured overdraft is your credit card advance that the bank gives you. There is no security available. Rate of interest charge is of course high, but it is an unsecured overdraft that is given to you by the bank. Bill purchase, bill discount. Again, this is one advance which we don't understand. Many terminologies are there. Documented bills, usance bills, blah, blah, blah. Many things are there. I will explain to you both the concepts by, again, my two hands, four parties, that is there. Seller, seller's banker, buyer, buyer's banker. Let's take bill purchase. The seller wants to sell the goods to the buyer. The seller makes the goods and dispatches the good to the buyer. But while he has dispatched the goods, he will not send the papers to the buyer. What he will do is he will take the paper. What are the papers? The bill, the railway receipt or the transport receipt, and he will go and give it to his banker, the seller's banker. The seller's banker will send these bills, papers to the buyer's banker. The buyer's banker will give it to the buyer. But when will he hand it over to the buyer? As per the condition of that transaction, he will give him the papers only after, I repeat, only after the buyer has made the full payment on that bill. So the buyer will get the paper provided he makes the payment. And once he gets the payment, and then he can go to the transport and get the goods released. Meanwhile, this seller has already sent the goods and this banker knows that he has sent the goods. So this seller will go to his banker, say that this bill has been sent to the buyer. Meanwhile, I need some money. Please give me some money. This banker of the seller will give some advance to the bank through the seller, and this is called bill purchase. Now, from Kashmir to Kanyakumari, if it is an Indian inland bill purchase, the goods have to reach from that end to this end in about 30 days time or 15 days time. The transport time is there. So the goods will reach the buyer's destination in about 15 days time. Hence, this bill has to get cleared generally within 30 days. A bill purchase facility has to get cleared. Once the goods have reached the buyer's destination, the buyer will go to his banker, take the documents, make the payment, and the buyer's banker will send the money to the seller's banker. The seller's banker will adjust the amount that has the advance that he has given and give the balance amount to the seller. Here, the bill purchase transaction is complete. This is legally and technically a secured advance. I repeat, legally and technically a secured advance. I will explain this term when I complete bill discounting. Now coming to bill discounting. Again, the same four parties are there. Seller, buyer, seller's banker, buyer's banker. But the transaction takes place a little different. The seller sells the good, dispatches the good to the buyer, and the documents of these bills, the bill, the railway receipt, the transport receipt, the seller will directly send it to the buyer. He will not send it to his banker. He will send it to the buyer. The buyer will take the goods, will acknowledge on the bill that I have received the goods, and I will make the payments after 30 days, 60 days, 90 days. That is generally the terms of clearing the bills. So he will make those details on that. After he makes these details on this bill, he will send these papers to the seller. Now the seller will take these acknowledged papers and go to his banker, telling them that I received this money within 30, 60 or 90 days. But meanwhile, I need money. So the seller's banker, based on those documents that have come in, will give some advance to the seller. This is called bill discounting facility. On the due date, the seller will give the documents to the seller's banker. The seller's banker will pass on the document to the buyer's banker. The buyer's banker will call the buyer, tell him your bill has become due. Please give the payment. The buyer will make the payment to the buyer's banker. The buyer's banker will send the money to the seller's banker. The seller's banker will adjust the advance that is given and give the balance money to the seller. This facility gets completed. This is called bill discounting. This is legally unsecured advance, but technically secured. What do I mean by that? In the first transaction, bill purchase, the goods were in the custody of the transport agency, which was an agent of the seller. So this is secured because the goods were either with the seller or the seller's agent, who was the transport agency. So it is legally secured, technically secured. In the second case, the goods are already in the custody of the buyer. So the seller has no lien over this good because they have already landed in the hands of the buyer. Still, the Reserve Bank says that this security has to be considered as a secured advance as far as the books are concerned, as far as classification of advances is concerned. So this is legally unsecured advance, but technically, as prescribed by the Reserve Bank of India, it is a secured advance. So that loan sheet that you will get, in that it will be classified as a secured advance on the same lines as stock is lying in the books of the person who has taken the loans, the customer, and yet it is classified as a secured advance, or book debts or the stock is classified by the bank as secured advance, though the bank does not have the book debts or the physical stock in its custody. It lies with the person who has taken the loan. On the same analogy, bill discounted is also considered as a secured advance. Now I will come to a story. I don't want to name the party. I mean, in none of the stories I name the party, but I will tell you what happens, why this bill discounted is considered as a dangerous advance. Four parties are there. Again, seller, buyer, seller's banker, buyer's banker. The seller goes to the banker, tells him, I am sending one bill. The bill goes to him, gets the first bill discounted. The first bill is very cleared by the buyer from this system, and the first bill is cleared. That bill is worth 5 lakh rupees. Then the seller again goes to this, discounts the second bill, a third bill, a fourth bill, a fifth bill. Finally, the seller tells his banker, you see, I'm sending all the bills and all the bills are getting cleared. Why don't you sanction a facility too? So the seller's banker will sanction a limit to him, say 1 crore rupees. After the 1 crore limit is sanctioned, the seller will go on sending out the bills till the limit of 1 crore rupees is fully exhausted. And most of the time, the bills which have been sent are sent to nearly one buyer or just 1 or 2 buyers. One fine day in the morning, 1 crore rupees is due. All the bills are due. the seller's banker who is holding the bills sends the bill to the buyer's banker on the due date. Today is 23rd of March, okay? So on 23rd of March, he sends a bill. All the bills are due. The buyer calls up the buyer's banker calls up the buyer. Landline phone disconnected. He gets a message. He calls up the mobile. This mobile number is not in existence or has been disconnected. The buyer's banker is not perturbed. He sends a peon. He sends a peon to the buyer's premises. What does the peon find out? That this person was here on a rented premises, but he has closed the office and he has gone away. The buyer's banker is not perturbed. He knows what has happened, but he takes all the bills. Buyer has vanished. He takes all the bills and he sends it to the seller's banker. The seller's banker, the manager, will now get panicky. He immediately phones up the seller. Landline disconnected, mobile not working. He takes his own scooter or his vehicle, rushes to the seller's office. Office is closed. He inquires with the neighbors. They say he was on a rented office. We don't know where he has gone, but the office is closed for the last 1 week. The buyer has vanished. The seller has vanished. Now, do you know why the Reserve Bank says that loans to be given only to known people and collaterals have to be taken? When such a situation arises, the fact is that the seller and the buyer were related parties. They were not different parties. This whole transaction was executed to defraud the bank, and this was not a genuine transaction. From seller to the buyer, the papers that were going were all only papers. No actual transport of goods had taken place. These bills are called accommodation bills. And accommodation bills are made for the purpose of defrauding the bank. So what are the precautions that the Reserve Bank has said? That when the seller is sanctioned a facility by his banker, the banker has also to specify the parties whose bills will be discounted, the name of the parties. And these parties are verified by the seller's banker that they are genuine parties, they are doing business. Before giving those names, the seller's banker has to ensure that the parties whose names, whose bills he will discount, he will accept are genuine parties. One. Second is that invariably the seller's banker will take collateral securities of immovable properties from the seller so that if any such things happen, he has got the security available to sell off or to fall back upon if these bills are accommodation bills. And finally, the Reserve Bank has said that these facilities should not be given to anybody. They should be given only to the regular borrowers of the bank, because regular borrowers have got all the other securities, other facilities which are available, so that the bank can fall back into on those securities. And I need not tell you about the major frauds that have taken place in the banking sector, where the banks are now struggling to recover persons. Those persons who had defrauded the bank are enjoying their life in the foreign countries, and the banks are struggling to recover that money. I mean, all those stories are in the newspaper. I did not get into the details of that. Now coming to the extent of verification specified by the Reserve Bank of India. In the circular that is on advances, you may verify it 100% because finally you have to sign the audited report. So the Reserve Bank doesn't say that you don't verify it. You can verify it, but physically in the time available, it is not feasible. So the latest LFAR says that you have to verify at least all loans which are more than 10% of the total advances outstanding. So if the advances outstanding is 1 crore rupees, all loans more than 10 lakh rupees have to be mandatorily verified as far as the branch is concerned. And they have got two limits. One is advances more than 10% or 10 crore rupees. So if the advances are say 200 crore rupees in the branch that you are going, all advances more than 10 crore rupees have to be compulsorily verified by you. And as I said, the name of the accounts that you are verifying has also to be given. Name, account number has also to be given in that paragraph. Now, for the purpose of extent of verification, you need to take your own call. What is the condition of the branch? If there are too many restructured accounts, if there are too much NPA is very, very high, etc., all that data has to be taken by you into consideration before deciding the extent of verification. The extent of verification does not say that you are not responsible for the other loans. You are responsible, but if you have done this 10% verification. Hello? Hello? Hello?
Continue, sir. Sorry, sir. Continue.
Yeah. But if you have done the verification as stated by Reserve Bank of India and you have given the names of the accounts, at least if any fraud takes place in the accounts which you have not verified, you can say that you have taken due diligence, you have taken due care in verifying the big advances, and as a result, you will not be held responsible because after all, bank audit is a test check audit. Then comes verification. We have already told you about the statutory audit report, the long form audit report. Put the details in these reports, and you can also prepare your query sheet or your verification sheet based on the LFR, the papers which are there. I mean, the questions which are there in the LFR. The most important thing required in bank audit, common sense. I'll give you examples of what I mean by that. Banks have got the best maker-checker system, yet they have got maximum frauds. Why? Very simple. Systems are not followed. And now I'll relate one story. This is a story that took place, and this was the first story in my audit life when I was still studying for my CA exams. In those days, we used to do what is called internal audit, quarterly audits and half-yearly audits. And in those audits, one of the requirements was that in those days, all the ledgers were manual. In those days, we were supposed to verify one-day transaction. One-day transaction means all the vouchers, all the transactions that have taken place in the bank on a particular day have to be 100% verified by us. And then we have to report if there's anything problem in that. So one day in a quarter. And I remember that day was 9th of March. I took all the vouchers, verified it. In one of the withdrawal slips of the bank, not the check, a withdrawal slip, a lady had withdrawn some small amount, I think it was about 10,000 rupees, in which in the card, the specimen signature card, her signature was in Gujarati, but the withdrawal slip had a signature in Hindi. Now, I was also still studying. I was a student. I had never done bank audit before that. I also never realized what this query is, but I had read that whatever is read is reported. So if there's a query, you need to report. Now, this check was passed by the assistant branch manager who was sitting there. So I went to the branch manager and reported to she was a lady. I told her that this check, this withdrawal slip on which the money has been withdrawn, I think it was 8,000 or 10,000 rupees. The card has a signature in Gujarati, but this person has signed in Hindi and the check has been passed. That was my last day as far as the branch is concerned. Then I went on exam leave. I come back from the exam leave and my boss is standing at the office gate. Mr. Sonawalla, you went to this bank to verify? I said, yes. Did you find any query? I said, no, sir, I just found this query of signature difference. What did you do about it? I said, I went to because the assistant branch manager had passed the voucher, I went to the branch manager. I reported the same to the branch manager. It is written down in my query. What is the name of the branch manager whom report? I said, I reported this. He told me a fraud has taken place in the bank and we have been summoned by the bank. I went to the bank, met the GM, told the GM that on 9th of March, when I went there, it was the month of May after our exams were over. On 9th of March, I had found this query. I had told this to the branch manager, so and so it was a lady, and the lady was summoned. The GM asked her, did Mr. Sonawalla report this? She said, yes. Did you take any action? She said, no. I was saved because I had reported to this, I had noted it down. Between March and May, the fraud took place. It was a very small fraud, about 50,000 rupees or so. And reason was also very, very silly. It was a new staff. We were recruited, very, very poor staff. Had a girlfriend, did not have money to entertain the girlfriend. So what he used to do, he studied the system of the bank. What I've said, the banks have got the best maker-checker system, yet maximum frauds. So this man used to stand at the counter, issue the withdrawal slips, take the signatures. Then there is another staff who is supposed to enter it in the ledger. He did that job himself. Then there's another staff, there's an assistant branch manager or some officer who is supposed to verify the signature. That man was also a lazy man. So he used to even verify the signature. So all the three jobs which are involved in the withdrawal slip, and the final job is making the payment, which was done by the cashier. All the three jobs was done by this one man. So the maker-checker system failed. And as a result, because he needed money, he studied all the accounts because they were manual accounts, found out accounts were dormant, that means they were not being operated. And he used to call his friend, hand over the withdrawal slip to him. He became so careless that he used to just sign anything, enter it in the ledger. The officer was not verifying signature. So he told the officer, yes, I verified it. So officer used to sign and the money used to go. The carelessness was also at the branch manager level. When I pointed this out to her, that this has taken place, she did not get back to that. Was the starting point of the fraud. Between March and May, the whole fraud took place. And then she realized when some lady came and said the money is not in account, then she went into the details and realized that this fraud is taking place, right? And how did this get detected? The staff concerned went on his college exam leave. So one of the things that, of course, this is not part of our statutory audit, but in concurrent audit, you have to see that there is a staff rotation and there is a staff who does not go on leave. If a staff is very, very helpful to you, to anybody, your bell should start ringing. If a staff is not going on lunch break, your bell should start ringing. If a staff is sitting very, very late in the office, in the bank, your bell should start ringing. If you find any of these abnormal things, your bell should start ringing. Why this staff is so active or is not taking leave or his department is not being changed. That doesn't mean that each and everything there is a fraud, but like a doctor, these are diagnoses and these are indicators where you can find out that there's something going wrong. In this case, this boy was not going on lunch break. He was doing three people's job and all three of them were happy because somebody else was doing the job for him. That is how this fraud took place. There is a circular issued by the Reserve Bank of India, loans and advances. Please read this. This is very, very important. There is a letter dated July 23rd, 21. In relation to this master circular that has been issued, making some clarification, that also, if you can read it, that would be very good. Now, there are stages of verification and a lot of stories are there in this. First is credit appraisal and sanction. Second is disbursement. Normally, we don't get into the appraisal part of it. We directly go with the sanction letter. We look at the sanction letter based on the terms and conditions given in the sanction letter. We verify whether everything has been done or not. Even in the sanction letter, there can be fraud that can take place, things which have not been properly disbursed. There could be frauds. If I get time, I will tell you frauds that take place even in the disbursement. In the disbursement, stamping, as I have already told you about the Stamping Act, charge noting has to be done. Any special conditions which have been given also need to be recorded and checked. This is the guidelines from Reserve Bank of India. Any transaction susceptible to fraudulent transaction to be directly reported to Reserve Bank of India by the auditors. If there is a big fraud that you have seen or you find that there could be a fraud, you need not wait to report it to the management or to your central auditors. You can directly write it to Reserve Bank of India. That is what Reserve Bank of India has told us. There is a master direction which has been issued on July 3rd, 2017, frauds, classification and reporting, which has to be done. In this circular, very, very, very important circular, there is an annexure which gives 42 early warning signals. I compared this 42 early warning signals with my 32 stories, and I realized that most of my stories are covered in this 42 early warning signals. These are practical hints or practical situations which have been given by the Reserve Bank of India for our benefit. Please go through this circular and read this annexure that is there. You will understand when you come across these situations, you will know that you need to look into those things. As I said earlier, that need not be that the fraud has taken place, but those are indicators that there could be something wrong. My next 15 or 20 minutes or whatever is granted to me will be on this screen only. Review of operations. Like a doctor or like a purchase of a car. When you go to purchase a car, the first thing that you will see is the car's machine working? Is the car in a working condition? If the car is in a working condition, then there could be some dent, the seats may be broken, the seat may be torn. It is all right as long as the car is in a working condition. But if the car is not in a running condition, then there is a problem with that car. You cannot buy that car. Same way, when you are reviewing the accounts in operations, review of the operations, you need to look into, is the account in a running condition? And how do you look into the accounts, whether it is a running condition? You have to look at the operations and you have to look at other papers also. Audited statement accounts, stock statements, physical inspection reports, these are all papers, and the operation of the account. These are most all the papers in which will help you to say whether the account is in a running condition or not. Now I come back to what I told you, talk to the papers. Sit on the computer and start looking at the major accounts that you have decided to verify. We have already made a list of the accounts you want to verify. Sit on the computer, but be careful, don't use the password of any of the staff. Why? If anything goes wrong in that account, or if any fraud takes place, and that is unfortunately the time when you are using his password, the staff will say that I've given my password to the auditor and he has committed the fraud. There is something called auditor's password. Ask for that. That password will not allow you to do any operations in the account. It will only allow you to view the account. Take that. If auditor's password is not available after giving that letter to the branch manager and he still doesn't provide you, then you can sit with somebody, but ensure that the staff whose password you are using also sits with you so that he is a witness that you have not done any changes. And please don't do any changes. I mean, you are not supposed to do any changes in that. Once you have marked out your list of accounts that you want to, and you have taken your password, go to the operations and look at big debits and big credits. What do I mean by big credits and big debits? If you have got the audited accounts and you know that the turnover in the firm or in the account is about 10 crore rupees, and you're looking at the operations on day-to-day operations, and you find that there is one entry of 1 crore rupees or 2 crore rupees. Now, in a turnover of 10 crore rupees, if a 2 crore entry comes in, whether it is a debit or it is a credit, your bell should start ringing that what this big entry or big debit or big credit can be. Even if it can be a credit, it can be even a debit. Look into it. That doesn't mean that there's a fraud. That doesn't mean that there's a problem. But you need to verify that what this other, because most of the times this abnormal credits and abnormal debits are places where issues have taken place. You will find in the account there is no debit, no credit. The branch manager or the officer will tell you, no, everything is on cash basis. Everything is done by cash. That does not happen. In each and every business, each and every profession, at least one side, either debit or credit, has to be by checks. For example, he is a retailer. If he is a retailer, he purchases by check from the wholesaler. He sells in retail, of course, the cash sales will be there. He is a wholesaler, there will be checks on both the sides. He is somebody who is buying scrap. So buying of the scrap is on cash, but as far as the sale of scrap is concerned, it is to the wholesalers, to the wholesale mills, which is there. So they will be checked. So in each and every account, there has to be check operations, at least on one side of the account. 10 crore is the total turnover that you saw. And in the accounts, there is a summation that comes at the end of the year, end of the year. If the total summation of the accounts is, say, 25 crore rupees in the whole year, you are going to audit after the March ending is there. 25 crore is the total this, and the stock statements show that the turnover is only 10 crores. Your bell should start ringing. Why the account turnover is 25 crore rupees when the total shown in the stock statements, the operation, the purchase sale is just of 10 crore rupees, or the GST statements are saying that the turnover is 10 crores. So there is something abnormal happening in the account. Account is continuously overdrawn. Most of the checks are bouncing. These are all that 42 indicators that I've told you. These are indicators that there could be problems as far as the accounts are concerned. So you talk to the papers, that is the operation of the accounts, and they will give you answers. Then now you talk to the other papers, stock and book debt statements. Take stock statements from February 2021 to, March 2021 to February 2022. The March statement may not be available with you because the party has still not submitted. By 10th of April is supposed to take that. Take the total summation of all the purchases and sales that he has given and see whether it tallies with the GST returns, tally with whatever purchases or sales he has shown in the statements. So you have to read the statements all together. Take the statement of March 21, stock and book debts, and you have got audited accounts. Try to compare it. In my audit career of 35, 40 years, I have still to come across an account where the stock statement and the book dated statement figures given in the March 21 statement tallies with the audited statement of accounts. Is it a fraud? No, it's still not a fraud. It is an indicator. It's a diagnosis that we have done that something may be wrong. If there's a difference of 5%, 10%, 20%, 30%, it may be that the stock given to the bank is on market price. The stock, as auditors, we have certified is cost price. Yes, there can be a difference. There could be goods returned that have come in. There could be bad debts that have been bad stock that has been written off. Something can be done. So if 20, 30% difference is there, don't worry about it. But if there's a difference of 80%, then your bell should start ringing. Why? Loan taken, advances given, stock statement shows 1 lakh rupees and the actual stock in the audited account is just 20,000 rupees. You have to put up that query and ask for the answer. If you don't get it, then this is an indicator that the borrower is fooling the bank. Then there is something called stock against LC. We have already spoken about LC, and against LC stock is given. Now, if in the stock statement, the same LC stock is included, it is double financing of the same stock. So you need to know the LC facility, stocks facilities given against the LC, stocks taken against that, and that has not to be included in the stock statements. In the bank, again, now this is a story. In the bank, when you go there and you find something is abnormal, before you talk to anybody, take the papers, send it outside with the pew, get it photocopied. Why? In some of the cases, there would not be any problem. But in some of the cases where I have found the frauds and where I have finally ensured that the branch manager is suspended, in that case, the moment I asked for the papers from the branch manager, he told me the files are not available. Unfortunately, he did not knew that I have already sent I had all the files in my hand. I had got everything photocopied. After I had done the photocopy, I then went to the branch manager saying that this query is there, please show me the file. So don't be surprised if files are not available, because if there is a problem, the branch manager is not going to. So first get it photocopied if it is a critical case that is there where you need to report. Another story. Now I'm going to just tell you all the stories only. There were 2 stock audits that were given to us by one of the banks. Both were in the same place, that is Vapi. In Vapi, I don't know whether Kolkata people are aware of that, but in Maharashtra, there is a place called Vapi. Vapi is an industrial area in which yarn weaving is done in the machines, and this yarn fiber comes from Guwahati, Assam, from Rekron factory. Now, from Rekron factory, Assam, for the fiber to reach Vapi should take about 7 days. These factories, they then process it, the yarn, and then the yarn is sent to Bombay for further making of the fabrics. So we got 2 such stock audits by the same bank. The first borrower, whom I told I have got this stock audit, he told me, sir, where do you stay? I said, I stay in Bombay at so-and-so place. He said, fine. From your Bombay to Vapi, you take a train, come to Vapi station, my staff will come there, pick you up, and he will bring you to the factory, then you can do the stock verification. That is how I and my partner, we went there. The audit was completed in 1 day's time. We came back, we did not find anything. Everything was hale and hearty. Stock audit completed. Then we called up the second party. As soon as I called up the second borrower, he told me, where do you stay? I said, Bombay City. He said, my chartered accountant is going to come to your house or to your office to pick you up and bring you to Vapi. Now, Bombay to Vapi by car is about 4 hours. By train, it is 2 hours. Yet he preferred that his car should come to my house or to my office to pick me up and my partner and then take it. This is the only dialogue I had with this borrower. But my bell started ringing. Why did my bell start ringing? That normally auditors are told, please come to Vapi station, and from there it will be. The fact that a chartered accountant is being designated to come to my office to pick me up and my partner itself was an indicator to me that there's something wrong with the account. And my bell started ringing from day one. But I had no information. So he came, explained to us what the things are. It was similar to the other first party that we had done. We went to Vapi, verified the stocks, stock statements, etc., etc. Everything appeared to be fine, but my bell had started ringing from the day that call had come. So I knew there is something wrong, but I could not find out. Then I went to the stock statement, which was given by the borrower for the last 14 months. From the month in which we were verifying, I went back 14 months to verify it. In all the statements, see, when you take all the stock statements together, all the book debt statements together, and then you look at what has been given by the borrower, you will get a lot of idea. You know where the stock statements are made? They are supposed to be made by the accountant of the office or the borrower. Most of the time, they are made in the office of the chartered accountant. Don't feel offended. Those are the facts. And the chartered accountant staff doesn't know what has to be given. He just gives everything because they know nobody verifies it. So when you verify it, you'll get it. Look at the book debt statements. You'll find the same debts being repeated every month, month after month. So when I looked at this stock statement, I realized that there was one entry. The total loan was about 8 crore rupees or something, 5 or 6 crore rupees. In that, there was one item in the stock statement stating stock in transit. What is stock in transit? Stock in transit is that there is a stock which has been dispatched from Assam by the Rekron factory, the fiber, to the Vapi factory. On the last day on which the stock statement issue is made, that is on 30 or 31st of the month, the stock has not reached the office of the factory. It is a paid stock, and hence the borrower is saying that this is stock in transit which I have paid for. So the stock is not lying with me, it is in transit. What is the consequence of stock in transit? That after 31st, in the next month, in the first 7 days, because from Kashmir to Kanyakumari, as I said, in 7 days, the stock should reach. So from Assam to Vapi, the stock should reach in about 4 days, 5 days, 6 days. So in the next 7 days, in the excise register or in the inward register of stock, there should be a stock of rupees 2 crores, which is shown as stock in transit. When we examine the statements, the stock statement booklet, the excise register to be specific, we found that each month the maximum stock that had come in between the 1st and the 7th of the month was not more than 50 lakh rupees. In fact, the whole month it was not more than 50 lakhs. What did this signify? That entry in the stock statement shown as 2 crore rupees of stock in transit was a bogus entry. Now I could join the dots together. We realized it, but we did not tell it. See, when you realize something, don't blurt out. Find out something more. Like your doctor, the doctor will find the head is paining. He will not tell you that you have got migraine. He will look into many other things and then finally he will tell you have got migraine. Because he examines and he finds, he makes it sure that what he's saying is right. Same way we found out that there is something wrong in this. This entry is a bogus entry. We went back to find out how many stock inspections were done by the bank. We realized that in these 14 months, the bank had done the inspection twice and nobody has pointed it out. We came to the office of the borrower and examined his books. We did not tell him this is what we have found. In the books, we realized that during the year, he had retired 2 partners of his and he had paid 2 crore rupees to them. Now, when partner is retired and if money is paid to the partners, that amount has to be brought in by the borrower from his own funds and not use the CC account. He did not have money to pay them, so he paid it from the CC account. Now the question was that the stock, which was supposed to be 6 or 8 crore rupees, came down by 2 crore rupees. So margin was not setting, was not proper. So he approached the chartered accountant who came to pick us up at my house. The chartered accountant told him that don't worry, nobody knows what is stock in transit. Nobody is going to bother to look into it. So just put 2 crore rupees as stock in transit. And for the last 14 months, that same 2 crore rupees was being repeated, whereas the stock that was actually coming in was 50 lakh rupees. The sum total of that, this whole episode and everything was that this facility that was granted to this borrower was cancelled by the bank. What I mean to say is that look at the stock statement, talk to them, look at the operations, talk to them, and they will speak a lot of things to you and they will give you a lot of insights into what is happening in this. I think I've completed my 1.5 hours. I've got more stories. If you permit, I can continue.
So you can continue for 10 more minutes if possible.
It is possible I can continue for another 1 hour. I've got so many
Sir,
stories.
your storytelling is very good, sir. So 10 more minutes, then we can have other speakers waiting. So 10 more minutes. Sir.
Okay. Thank you for the 10 minutes. In one other audit, we went. The branch was on the 1st floor. Same strategy. Looked at the stock statement. Now, the stock was given against spare parts. Machinery spare parts. Value of each one of them is about not more than 10,000 rupees. Now, just imagine 4 crore rupees facilities given against, 4 crore facility given against stock of 4 crore rupees. What should be the size of the stock statement that comes to us? It should be at least this much, this thick. When we got the stock statement, it was just 1 page with 4 lines on it, 4 items given on it. The moment we saw that, our bell started ringing. But we did not tell the bank that we think there is something wrong in this. The second thing we did was we went into the sanction facility to find out how many godowns were there. There were about 6 godowns. We went into the insurance policy, found out how many godowns are there. We found that there are 6 godowns that are there. We looked at the stock statement. Yes, details were given that 6 godowns are there, but the facility, the stock that was given was only 4 lines. Now, what do? We knew this is not correct. So the next thing we did was to ask for the inspection report by the bank. Incidentally, the person who had gone for inspection about 15 days back, he was sitting in the branch. We called him. And when you question any staff on critical matters or on things that you have found out, this is one more suggestion to you. Ensure that the branch manager stands next to you. Because when you are questioning, you should have a witness which is standing next to you, because the person who is going to answer is going to give some answers verbally, and you cannot then pin him down on that. So you need a witness who is standing there, who will vouch that yes, this is the answer that has been given. So I told the branch manager, please sit next to me. I am going to ask questions. and you are just going to listen, you are not going to talk. I asked the person who went for the stock inspection, did you go for the stock inspection? He said, yes. Incidentally, one of the godowns of that party was right on the 5th floor of the building on which we were sitting. We were sitting on the 1st floor of the branch. This stock borrower has one godown on the 5th floor. I asked the staff, did you go? He said, yes. How many godowns did you visit? He said, I visited 3 godowns. In the stock statement, 6 were given. I said, fine. Did you go to any other godown? No, I did not go to any other godown. Fine. You went to this godown on the 5th floor? He said, yes. Well, now this stock statement has got only 4 lines, which does not give an inventory. Definitely, when you go for stock inspection and you said you have verified all the stocks, there has to be a inventory. Give me the list of inventory that you have verified. When you say you have verified 100%. The fact was, he did not know there were 6 godowns. He did not know the insurance policy 6 godowns are given. He went only to one of the godowns, which was on the 5th floor, and he just went there, probably had a cup of tea, had something else. I don't want to mention what it was, signed it, that stock verified, and he came back and he gave the statement. The long and short of it was that this staff who had signed it probably got reprimanded or was suspended by the bank, and this account was classified as a NPA account. What was the starting point of this? 4-line stock statement. What was the end of it? The account was classified as NPA. So talk to the statements and they will tell you that something is wrong in his account if you get that in. One other account. This was, yes, one thing I forgot to tell you. If you go to the branch, find out who are the borrowers, who are the major borrowers. If there is one borrower who has been given nearly 80, 70, 80 or 90% of the total advance in the branch, be assured that this man is a dominating man as far as the branch is concerned, and verify his account properly, because there will definitely be, I have faced this situation twice, and in both the cases I have found that he's so dominant. He comes to the bank and says, if they don't listen to him, if I don't bank with you, your salaries are not going to be paid, because he's a main borrower. 80, 90% borrowing is given to him. So we got one such branch about 3 or 4 years back, and the advance given to him was out of 50 crore rupees or 55 crore rupees, about 40 crore rupees advance was this to just one account. The other thing we found out about this account was that this account was already an NPA with a 40% provision. So normally as auditors, if an account has been classified as an NPA with a 40% provision, D1, we will not bother to get into the details of it. And we will just say, okay, it's already doubtful. Now what else do I need to verify? But talking to the branch manager, I realized that on 31st of March of that year, at 2 p.m., an order came from the central office saying that please restructure this account. And they started restructuring the account, and the restructuring went on up to 3 a.m. in the night. This was the statement that was made to me by the branch manager. This one statement was enough indicator, diagnosis for me to know that he is a major borrower. One, his account is already NPA. And third is that an NPA account is being restructured to save it from becoming D3, doubtful 3. It was D1 or D2 it was, whatever that was. But it was already a D1, a doubtful account, and it was restructured for that. That was enough for me. Also remember that the bankers, they may restructure it, but they also know that their heads are on the roller. So they will ensure that everything that is wrong in the account is documented in the file. Because if any inquiry goes on, they will be questioned. So I opened the file. It took me about 3 or 4 or 5 days to verify this account. And I opened the file for the restructuring and realized that all the terms and conditions that were specified for restructuring, majority of them were not complied with. Many concessions were given. All that was noted by the staff in the file saying that this has not been done, and yet the account was restructured and additional provision was not made. We took all those details, prepared a report. Incidentally, at that point of time, the central statutory, one of the central statutory auditors was my friend, who is also an author of the book that I just sent, Audit of Banks. I called him up and I said that, Mr. So-and-so, this is what I found. I want to make additional provision in this. So what do I do? He said, you go ahead, prepare a report and send it to me and send it to the central auditors, the regional office, specifying all the details. So we made a big report, put it there in the main audit report as an annexure. And at the end of it, we said, considering all the above facts, it is our opinion that though this account has been restructured and does not require additional provision, in our opinion, that 40% provision should be converted, should be made to a 60% provision. Of course, I got a call from the regional office saying you don't do this, blah, 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 etc. I said, nothing, this is my report, you take it or leave it. So finally, they had to take this report. It went to the central auditors. After the audit was completed, the provision was made, and my friend told me, Sonawalla, not a single officer in the bank protested about this provision. Because the moment they protest, they had to answer all the queries that were raised. So if you are diligent in doing audit, if you do it, sit there properly, if you know your laws properly, if you have done that, then there have been times when I have signed the account on 18th of April. We are supposed to sign on 10th, right? They sit on a bag. And on 18th of April, that is also a long story. I'll not get into the details of it, but 18th of April, I signed the report, and the regional manager of the bank was pleading to me in my office, Mr. Sonawalla, please sign it. That was a branch in which, by virtue of one clause of Reserve Bank of India, NPA clause, we had made half of the branch NPA into into doubtful debt. Just one condition given in the Reserve Bank of India, and which says that if the value of the security given originally goes down by more than 50%, even if the advance is good, that advance has to be classified as a doubtful advance. Nobody was ready to believe it. I told them, go to the Reserve Bank, ask them, this is what Mr. Sonawalla is saying. If I'm wrong, bring it in writing. They went to the Reserve Bank. The Reserve Bank officer said, what Mr. Sonawalla is saying is right. Your 50% of all your major advances, where value of the security has come down by more than 50%, will have to be classified as a doubtful advance. They had no choice but to make it. I signed the report on 18, and that branch was the major accounts classified as doubtful. Next time, I thought I'll never get this. That was my first year in that bank. I thought I'll never get the bank audit. Next year, they gave me 3 big branches. I went to the central office accountant and asked him, why did you give me this account? I have made so many NPAs. He said, Mr. Sonawalla, next 4 years, in those days, there were 5 years. Mr. Sonawalla, for the next 4 years, your firm is going to get big branches from me, 3 big branches, not 2 big branches, 3 big branches. You are going to do the audit, and I'm going to call you up and ask you what you have found in the branch. We are looking forward to auditors who are diligent enough to tell us what is going wrong in the branch. And for the next 4 years, we got big branches. We were not blacklisted. After a gap of 2 or 3 years, whatever that cooling period over the other branch, they called us back. And last year, we completed another 4 years. So we did 9 years audit. In the first year, I had made so much NPAs. And for 9 full years, that bank gave us the audits. What I mean to say that if you do your job diligently, don't worry that you lose it. You will probably be awarded with bigger branches by the management, because they also look forward to it. Thank you very much. I have one slide which renewal announcement, reschedulement, balance confirmations, physical inspections. I think all these things are known to us. This completes whatever I had to convey to you in the time available. Thank you very much.
Thank you, sir. Thanks a lot. Now I would request Hemant Lakhutia to please give a vote of thanks to sir.
Thank you, President. Thank you, CA Ismail B. Sonawalla ji, for the wonderful session. Friends, audit of advances is one of the most important aspects of bank audit, as lending represents the largest source of bank's income and the most significant component of bank's assets. Sir, in the short span, you have highlighted key points to be looked at while reviewing advances. Also, the issues which you had highlighted as faced by you during audits, in your audits, would definitely help all our participants. So on behalf of our association, I would like to present you Digital Memento as an expression of gratitude for taking up the session. Vivek, I cannot share my screen. Vivek?
1 second, bhaiya.
Okay.
Yeah.
Thank you. Thank you, sir, for taking time out for association, and this e-memento will be shared to you over the email.
Thank you very much.
I would like to add over here, Sonawalla ji, I would like to add over here, Sonawalla ji, the stories which you told, it was so lucid, so simple, and so close to us that we thought that we were listening a podcast, and you can have a good podcast of all your stories. It was as if we are listening something and we are learning a lot. There are key takeaways from those learnings.
Thank you. Thank you. I have got a session for the students on Saturday in which I'm only going to share stories because students will get bored with all the literature that we share, the chartered accountants. So on Saturday at Bombay, for the West India, there is a student section that will only be a story session for 1.5 hours.
If you can share the link, I will share to the students of our East India ICASA also, so that people can get some value addition.
Okay, I will inform them because it is physical come virtual lecture. Okay. I will request them if they can share it. I will definitely, they'll definitely. It is only meant for students.
Okay.
Yeah, it will be for students.
Thank you.
Thank you, sir. And
thank you.
We have been waiting for Mr. D.S. Premnath, and he is here with us. So our bank audit session by ACA is incomplete without having D.S. Premnath, sir. So I would request Hemant ji to please introduce D.S. Premnath ji.
Hello. Thank you, President. So the next speaker for the day is CA D.S. Premnath ji from Hyderabad. He will be taking the topic use of Excel in bank audit. CA D.S. Premnath ji is partner with Messrs. C. Ramachandran and Company, practicing chartered accountant firm. He has a professional experience of more than 35 years of handling audit of large manufacturing, infrastructure, software, and PSU companies. He also has an expertise of carrying out forensic assignments of MNCs and large manufacturing companies. He is a regular speaker at various training programs, seminars, and conferences conducted by ICI on topics such as e-filing, XML, XBRL, audit under CBS, GXT, etc. He has been a regular visiting faculty at Income Tax Department, Hyderabad, GST Central and State Government, Hyderabad, on GST fraud analytics, CNAG staff training, Hyderabad, and many others. So with this, I request CA Premnath ji to take the proceedings from here.
Thank you. Thank you very much. At the outset, I thank AC for one more opportunity to interact on the bank audit session. And I'm privileged to share dais with an eminent speaker, Sonawalla sir. I was fortunate to listen to sir at Bangalore. Very lucid presentations, and he takes the stories to the members in such a way that we can remember it, and then at the time of carrying out the audit, we will definitely remember those, the way in which sir takes us, sir explains with records and correlating it with circumstances. The audit, balance sheet, and all was an excellent way of explaining the situations in a very interesting manner. And we can't forget the way sir explains it. Thank you very much for making me a part of this session where eminent speakers like Sonawalla sir is addressing. Thank you, Sonawalla sir, for enlightening on a very good issues. Thank you, sir.
Thank you, Premnath ji. Yes, I missed your lecture and I did not allow you to take the session before me because I was supposed to go to Mysore after that post lunch. So I'm sorry I did not allow you, but yes, I'm now listening to your lecture.
Understood. Thank you. Thank you very much.
On a lighter note, Premnath ji, I would say that Sonawalla ji accepted our invitation because you were there in the session.
Oh, it's my privilege. It's my privilege.
Yes, yes, I know. I saw that when I accepted it, Mr. Premnath was there. So I said, let me take this second session. And incidentally, then when we went to we had to go to Bangalore, I had to leave before lunch. Post lunch, Premnath, I said, Premnath, I'm going away to Mysore that time, so I cannot share my timing with you. Please, you will have to take your.
Yeah. Okay, not a trouble, sir. Thank you, sir. Now, I think I can share my whole screen, right?
Yes, sir.
Yeah. Right. So, so my presentation today is on data analytics. My presentation is on data analytics for reporting under LFAR and IFC, more peculiar. So I think members has a facility to interact on the chart.
Yes, sir.
Yes, Mr. Yeah, okay. So what I do is I would like to, I am just flashing a screen. Then I would request the members to highlight something which is unusual in the screen. And then we'll go ahead. I request the participants to highlight something unusual in this document. I think the organizers can refund the fees to those who react first.
Sure, sir. Sure, sir.
Thank you. Yavanas. Yes, name Radha.
Radha and Radha K.
Yeah. Ashisha, very good. Thank you very much for your fast thing. Yes, Meetu Bansal, different customer IDs. Super, excellent. Yeah, that's what I was expecting. Different customer IDs are existing in the bank. For whom, Mr. Meetu? For whom the different customer?
Radha.
Yeah, Radha. It's spelled as Radha K and K Radha and Radha Suresh Kamath. There are three different names having three different customer IDs. But RBI clearly says that there can't be more than one customer ID. But I think there is something else very serious you need to look into. There's something very serious again in the content. A fraction of a second, you can just look at the last line. I'm just giving you a scope, a hint. Kindly look at the last line.
Festival advance staff.
Yeah, customer staff. Now, do you understand the customer, the staff himself having three customer IDs? Staff himself having the three customer IDs is the way in which the banks are run in this country. Under the CBS. Under the CBS and the two under, they tell us that total branch computerization. This is the word they use, total branch computerization. And is it so? Is it so that it is total computerization? Let us just look at what they say as total computerization. I'm just taking you through gold loan process. I'm just taking you through the gold loan process, which has 15 processes listed by the bank, 15 processes listed by the bank. Each process has maximum 2 or 3. This is a legend used for start, and this is a legend or a dabba shape used for manual processing. And you see, this is a manual, this is manual, this is manual, this is manual. And this is a decision table. And this is a decision tool or legend. And you find, I think you recognize almost all the 15 except for one, this diagonal dabba is a CBS process. This is the only CBS process, and the rest of it is all manual processes. Now come back to this. Now, do you agree that it is total computerization under CBS? No, it cannot be total computerization. If it is not total computerization, then that's where we are here now. And remember, 233 lakh crores of GDP is moving into the banks, and 200 lakh crores as deposits and 182 lakh crores as credit. This is as per January 2022 of RBI database. And there are NPAs of 13 to 14 lakh crores only declared, undeclared, God only knows. Out of that, 3 lakh crores. Now you may tell this to the bankers. Bankers will say out of 200 lakh crores, 3 lakh crores is just 1.51% or 1.5% or 0.5% or 0.75%. Or they may say around 1% is the banking loss. So what is the problem? In terms of percentage, they may talk in terms of materiality of 1%, but I say it is 3 lakh crores. 3 lakh crores means Indian government can afford minimum of 6 to 7 bullet train projects. That's from Mumbai to Ahmedabad kind of a thing. 6 to 7 bullet train kinds of projects, which will be useful for next 100 years for this country. And that is all about the way banks are working. And that's all about the way the banks are working. And we the chartered accountants, sorry to say, they are giving clean report in internal financial reporting. The fun is internal financial controls report is prepared by the management, and I've just hidden the bank name for confidentiality. Otherwise, I would have loved to share even it, except for the confidentiality, I've hidden it. This is the report which I've signed last year, and you can just see. This is a question they have asked in internal financial controls. And remember, before we have signed it, they have sent this branch auditor's response, this document, what I am sharing to you, they have sent to us marking it as yes, 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 yes. In all the columns, they have mentioned yes. And they have expected us to sign it blank without asking any questions. That too when not on the floor of the audit, but after we have signed the balance sheet. This we have signed it on 29th of April 2021, whereas our audit got finished on 14th of April 2021, because 15th was a festival for us, Gudi Padwa. So we have completed it before that on 14th last year. Now, again, look at very recent 2021 I am talking about. It talks about KYC documents, process of KYC document, sub-process collection of KYC document. Now the control activity, they say it is checklist is maintained as per RBI, etc., etc. Original is verified. But in spite of original verified, actually, originally, this document they have submitted making everything as yes, and they have sent it to us after the audit completed. Then I said, let me read this and start answering. Then I said, remove all those answers. Let us write our own answers. And then we started writing, and we have highlighted, I think you can see here, there are 4 customers having duplicate customer IDs. and one among them is NPA. And rest of it, having come here, I'll just quickly run through and then we'll move on to the other issues. Now, this is a question they are asking. Due to SOLOP function in Finacle, system shall. Now, what it says is interest paid on deposits, payment of interest on deposits is a thing. They say it is the control is due to SOLOP function, which is a function in Finacle. System shall show an error if there is a difference between the interest accrued and interest paid. But they have said yes. But I said, unless I verify, how do you expect me to say this? So I said, due to limited audit time and server issues, when we were trying to do it, the server was not responding. So we have not verified the same in Finacle. And majority of our answers is disclaimers because they have not allowed us to do it. And moreover, and this is a story you can look at here. Now, because there was a difference in the ATM cash. So yes, they said the dual control, this is a control on the dual control on the cash. And here cash balance in branch is periodically verified. We have carried out physical verification. The balance of branch books is so-and-so, whereas the actual physical cash is so-and-so. We were explained that the difference of so-and-so is on account of pending locker rent wrongly posted in cash book as cash received in books, locker rent relating to so-and-so and this. Meaning, I hope the viewers can agree to me. And this is, there are no preventive controls in accounting. There are no preventive controls in accounting. When a wrong entry is being debited or credited, the system is not saying anything, meaning journal vouchers are the biggest nuisance in the banking, and that journal vouchers are used for suspense accounts. And that's the reason why you need to take out complete printout of suspense account and use data analytics for search, filter, VLOOKUP or pivot tables to extract out unusual transactions. When I was taking a session, one of the participants in Calcutta only has called up and said, sir, the biggest branch in biggest bank of this India, I don't want to name it, you might have known that the moment I say biggest, in that 45 lakhs of cash, 45 lakhs of amount is regularly debited and credited in the suspense account, and they are rerouting it to the customer account to see that the account is not made NPA on a frequent basis. Because that control lapse is still even today existing. Meaning what? Meaning, as I said here, we'll move on to the control weaknesses. Now, that is the control weakness. What I'm trying to say here is control weakness with respect to the IS. There is no, it lacks, first of all, the scope is inadequately covered. Next, end-to-end testing covering of interfaces. What is interfaces? Like Tally, most of our clients use Tally for accounting, general accounting, financial accounting. For inventory, they have one. For sales, another package. For fixed assets, another package. For GST, another package. For ETDs, another package. For HR, another package. And so on and so on. And what we as an auditors do, we reconcile all those independently generated data from independent softwares with the Tally software, and we make a lot of reconciliations. And then we say, yes, it is true and fair. But when it comes to a bank which is so large transactions, crores of transactions in a fraction of a second, now it's not physically possible for physical reconciliations unless all those integrated systems, all those dispersed systems are integrated. What I'm saying, is it unbelievable? Let us look at the SBI report, audit report, then you will agree with me. Now look at here. As a key audit matter, SBI auditors have said about IRAC norms. I think the highlighted portion, you can read it. Identification of performing, non-performing advances involves establishment of proper mechanism. The bank accounts all transactions related to advances in IT system called CBS, which also identifies advances are performing or non-performing. It is saying which also identifies. CBS, they say, can identify. However, further, the word used here is further, but I say however. NPA classification and calculation provision done through another system. NPA classification and provisions are done through another IT system called CCDP. The carrying value of these advances may be materially misstated. That's what the auditor is saying here. May be materially stated. I say it is not may be materially stated. March 2019 accounts, 13,380 crores, 13,380 crores of NPAs were understated by SBI, and this is stated by the RBI. Not only that, during 2020, 19 and 20, 45,000 crores of NPAs were understated by the PSU sector banks, and 13,000 crores or something by the private sector banks, meaning it says whether the processes are integrated, whether the interfaces are properly working, is what we need to talk in internal financial controls as well as LFAR. I'll come back to that LFAR a little later. Okay. So since let's just move on to the sheet where we have stopped. Yes, this is where we have stopped. And now here we say that there is some control issue which is resulting in multiple creation. Let us look at that. This is a screen through which the names are entered. The account is created through customer master maintenance, CMM, CUMM. The screen comes out if you type CUMM. If you can trace my mouse blinking here, CUMM is a menu that you have to type here, then the screen comes up. Okay. Now comes 3 important questions as a part of internal financial controls review, IFC. There are three important questions that we need to raise. Question number 1, what is the possibility of committing an error while entering the name? Question number 1. Question number 2, if this error occurs, whether the error will result in material misstatement. Number 2. Number 3, for this risk, are there any control? These are the 3 important questions that we need to keep asking at every field. At every field. There are so many fields on one screen, and there are 18 such screens for creating one account. So in 18 screens, you have so many fields. I'll come back to some of these fields. But I repeat again, 3 important questions. What is the risk? What is the risk if an error is committed here? What is the probability of committing an error? If such risk occurs, is that risk going to affect material misstatement of the financial statements? And third one, what is the controls around? What are the controls? Preventive, detective, corrective, and compensative. So which of these controls are going to prevent occurrence of this risk? This is the 3 questions. Let me take you to again gold loan process and then talk about the risks. Now this is the risk control matrix. I said 3 important questions. Question number 1, risk. What is the risk in agriculture gold loans? Risk where at every process, what did I say here? At every field, you should ask the question. I'm saying at every process, you should ask the question, is there a risk in taking the application? Yes. If so, whether that risk will have an impact on the material misstatement. What is the risk in pre-scrutiny? Is that risk impacts balance sheet? If so, what are the controls? Same way, 15 times you need to ask this question. 15 times you need to ask the question. Now, what is the control if risk occurs? Whether that control is a preventive, detective, corrective, compensative. Whether such control is a manual control or a system control. I hope I'm clear. Come back to this now. For all the 15 risks, I'll just talk about only one. So here, I've taken all the 15 risks here. 15 risks are taken here. And first risk, first process is sale of gold loans or giving a gold loan. Now sourcing is the first activity, first risk, first activity. Now the risk is described here. First risk is described. What can go wrong? I said here no. The first risk here is the name can be wrongly entered. Similarly, the first risk here is incomplete document, inadequate document, incorrect document received by the applicant during the source is a risk. Branch has identified this risk can happen. Please understand. Please understand, incomplete and inadequate documents can be taken. But when you and I are enrolling into ICAI, concurrent audit, or some certificate courses, it will ask for us, it will ask us to upload our photo, and then our database is already validated into it. So there is no question of myself submitting a wrong PAN number to the department, a wrong Aadhaar card to the department, a wrong address to the ICAI, because my database is already validated well before. So there is no risk in the ICAI creating a wrong account for a non-member. But look at the banking, whether such kind of things happen in bank, because that kind of things cannot happen. So they have to rely on the other databases like Aadhaar or PAN or voter list or driving license or passport or something else they have to rely, or land records they have to rely, but they are not relying as of date. And that is the biggest risk. They recognized it. If at all such a risk happens, how that risk will be? That risk will be like unavailability of required documents, like KYC documents are not available, gold ornaments are not taken, memorandum in respect of gold ornaments, DP note, DP delivery note, all this thing, negligence of the officials with respect to completeness and accuracy of the documents. And this stated risk can happen in this format. Now, what is the control? Till now, up to this, it is risk identification. Up to this, it is risk identification. From here onwards, it is control. Now, to prevent this occurrence of risk, what is the control? The control is following documents are designed, like DP note, gold ornament, take delivery letter, witness, copy of arrangement letter, photographs, blah, blah, blah. All these things has to be in place. That is a control. Now, when this control, it is a transaction based. Whether this control is manual or system. I'll just take a small gap to make it interactive on the chart. May I request the members to respond? How many of this are manual controls? How many of this can be? I'm saying can be. Initially, bank itself is saying manual, but this is a value addition that we can give to the bank. Understand? So I'm saying how many of this are manual, how many of this can be made as a automated. Automated controls are better preventive. So can I expect some response from the on the chart, please? So then we'll move into the data analytics. I think you are able to see the controls with respect to the risk. that these documents will be preventive. That's what the bank says. But do you agree with this? How this has to be implemented? Can someone respond, please? Okay. Okay, moving forward here again. Coming back here. Now, if this control environment, it says this documents should be taken. And this is manual. You can see here, there is a drop down. It says manual, automated, partially automated. If you filter on the manual things in all the 15, you will get 11 out of 15 processes are manual. Okay, that's also not. Now, if a risk occurs, meaning if insufficient documentation occurs in this, meaning risk has occurred. If risk has occurred, whether that risk will impact your financial reporting, like income expenditure, asset liability, and presentation. May I expect the viewers comment on if insufficient documentation, whether ineffective documentation results in material misstatement. Can I expect a result on the can I expect a response on the chart, please? I think the viewers are active.
Vijay Agarwal ji has said that yes.
Thank you, Ashish.
Ashish
Yes.
Shah ji has also said yes. Yes.
Yeah. Vijay Agarwal, thank you, and then Ashish, thank you. Yes, that will affect material misstatement. But look at the bank, which the bank has circulated this IFC stating that if any deficiency in these things will not affect material misstatement. Okay, let me just see now. I'll just filter out. I've just filtered here and I'll put it as not applicable. I'm just taking not applicable, and let us count how many not applicables are there among the 15 risks. You will see 10 out of the 15 risks, it is saying that P&L will not be affected. Let us come back here. If documents are not there, P&L will not be impacted. That is what we are seeing here, not applicable, right? Let us see something else again. Yeah. If you can just see here, loan to value of 75% should be maintained throughout the tenure of the loan. If this is not maintained, its security value will be eroded. If security value is eroded, then it's going to impact the profit and loss account. But the banker is saying, no, it will not impact the bank profit and loss account. And you can see many of those things, they just say no. And this is what I would like to take to your notice, that be careful while reporting the internal financial control reporting, because banks have already pre-filled. Before you go to the bank, they have already pre-filled your internal financial control reporting, and they have already stamped it as yes. And they are only waiting for your round seal to be put on at the end of it. So be very careful. Yeah, this is what we have already written it also. You can see we have completed our audit and submitted our report on 10/4 as per the instructions of RO. This document is shared by the branch manager after completion of audit. Accordingly, we are unable to comment on most of the issues relating to daily operations, financial reports, etc., etc. These kind of disclaimers will only protect us if something goes wrong in the bank. Okay. Now, coming back to the agree. Now we have stated that, now we have seen here ineffective documentation will not result in any risk we have seen here. But let us look at a case study here. And this case study is a real-time case taken out from the CBI FIR on gold loans. SBI has filed a case with the CBI. They have filed a case with the CBI about a gold loan, and in that gold loan, they have started writing all these issues. And all these issues are none other than the documentation lapses. And because of that, 669 lakhs of rupees completely eroded from the bank. And there were no golds, or physical security of gold is also not existing. And now for this, such a high risk thing, bank is coolly saying there is no impact on profit and loss account or balance sheet or presentation. So I've just taken you to the risk control matrix as a part of internal financial controls. And if you are talking about 15 processes of only gold loan, now you can look at other processes. In the same way, let us look at the other banks, the way in which they are forcing the auditor to sign. You look at this, and the number of processes this bank has covered is 41. One bank has covered only 41 processes, but gold loans alone is 15 processes. And you can imagine how many number of processes there can be. But the branch auditors are given only 41 processes, and God only should know whether all processes have been captured in this or not. Now, can we agree to this kind of risk control matrix? Now you can see here, this bank is least bothered to mention about the risk in this. Whereas you look at this bank, which is talking about risk identification process wise, but you look at this bank is not talking about any risk. And look at this Bank of Baroda talking. They say there is a risk category, verification place, process, sub-process. They have at least described the risk and control activity, but they are not saying whether that control is human, whether that control is automated, nothing, no drop downs, nothing, whatever. You can just see the control activities mentioned. And they are saying what is the response of branch and what is the response of office. And this is the way in which banks are carrying out the bank audit. And sorry to say, the regulators wanted to close once and for all the bank branch audits. And it is for the chartered accountants to raise and highlight these kind of irregularities in designing the risk control matrix. Such an important thing, risk control matrix. One bank is designing like this, one bank is designing like this, and another bank is designing it, but they coolly say they're not applicable. And now you can see there are 12 to 15 banks, PSU banks in India. Each of them are looking in one way, and RBI is saying you don't require any more bank audits. My dear members, it is for us to raise to this occasion, and then tell the RBI with uniform voice, writing as many stories as possible from the content that is available in the CBI reports. Now, where do you get all the CBI reports? Where you can get all the CBI reports is you can go on to CBI website. So Google on CBI website. Google on CBI website. 22nd, I think yesterday, 22nd, one case is filed. I don't know whether it is of a bank, but let us try to see this, if I'm not wasting your time.
We all are learning, sir. Why wasting time, sir?
Let me just, it takes a few seconds. The PDF document uploaded as a complaint is opened. Let us wish that this is not a, yeah, we are happy, fortunate that this is a bank audit, a bank related case, and which is filed yesterday in Hyderabad from my place. And let us see what they say. The case is filed here, accused 1, 2. We should be happy if chartered accountant name is not there. But in some cases it is there. Okay. Let us see here. Let me just take you to the right. Loan sanction details here and after. We'll go to the, there will be a forensic audit observations in this. Yeah. Observations of the investigating officers. Bank, after initiating surface action, slippage so and so, it came to light that the borrower has committed a fraud, mortgaging non-identifiable properties as securities, meaning there are ineffective internal controls with respect to the properties taking as a collateral. Next, it is observed that the extent of so-and-so is diverted to the guarantor's account. Amount is diverted. Apart from above noticed that 50 lakhs is diverted to so-and-so, maintained at so-and-so branch and transferred to so-and-so for 69, where amounts are withdrawn in cash, which clearly indicates that the borrower has diverted the funds. And like this, you have now grounds of declaring the account as fraud is so-and-so associates have revealed the fraudulent, meaning this is an account submitted. They are forensic auditors. They have carried out this and then they have submitted all this account. Okay. The point what I'm trying to say here is there are so many stories. If you go into the previous year, database, you can see here previous year, all 21 up to January, 3,633 cases, not all are related to the banking. 1,500 bank fraud cases are registered in the CBI, 1,500. Out of that, I have taken 25 and then I'm looking at, you can just see here 200, meaning there are 19 pages of each 200, that many CBI cases with our almost 1,500 CBI cases of almost all the banks. Why I'm referring to almost all the banks is, if you can read at least 3 or 4 or 5 of each bank, then you will understand the internal control weaknesses in that particular bank. That will make you to comment properly on the internal IFC. In this IFC, you can write more stories in this IFC. If you know, if you can read these tons and tons of stories, that's what I was saying. Sonawalla sir was mentioning all those stories. That's very important for us because each story is talking about a lot of internal control weaknesses, ineffective controls and weaknesses, where under the so-called 100% computerization. And sir, I repeat at the cost of boring you, unless we wake up, we raise to the occasion and fill tons and tons of stories in IFC and LFAR, no one can assure future bank audits to us. My voice may look at pessimistic, but it's high time that we need to stand up and fill in the content. Where is the content? Content is just before us. It is in tons and tons of material we have. Only thing is we need to read and look into the bank wise, take out all those, and then only we can move on into it. Let's come back to our story again. We were talking about the controls here in the name creation. And I said there is a weakness in this. And then we have gone into the we have gone into the loan. We have gone into the agri loan processing. We have compared with another bank. We have compared the process with another bank. And we have realized that the banks are only fooling the chartered accountants in terms of internal financial controls. And that if we can realize, and then we can have a very good fight with the bankers in the days to come now as a part of bank audit. Now, this is what I said. If you can read all these violations, all these internal control violations, bank has recognized it very well. And they have stated all these are maker and checker. All these are maker and checker controls. And maker and checker controls, in a lighter way, I say maker and checker means the other name for maker and checker is Nirav Modi, Punjab National Bank, 14,000 crores, 14 years, bank was closing their eyes. And that has resulted into 14,000 crores. That is what the moment someone talks about maker and checker, I only immediately remember Nirav Modi, because after Nirav Modi's PNB 14,000 crore scam, this maker and checker word got registered in my mind, even though I am a chartered accountant for the past 30 years. And coming back again to our analysis now. So we have understood that there are weaknesses in this. Okay. Yes. Supreme Court is saying that there are internal control weaknesses in a part of judgment. CBI cases are filed stating that internal control weaknesses are there. Why so much? If you look into this, another case filed by the bank, such a funny thing. Bank itself is saying, sir, there were no proper upkeeping of vouchers records for day-to-day operations at the branch. Bank itself is saying, I am very weak in internal controls. Bank is saying I am weak in internal controls. But I, as a chartered accountant, saying, yes, you are super. You are very good. You are true and fair. And that is the comments I am giving. However, bank is telling the CBI that I am very poor. Bank is telling the RBI that I am not keeping up the vouchers properly. You can look at this. And then you see here, the most funny thing is they are complaining on the concurrent auditor. Failed to reconcile the expenses. It seems concurrent auditor has failed to reconcile the expenses for the amounts taken on the financial statements. Is it a part of concurrent audit? Surprising. Surprising. You can just see here the management of the borrower entity. Sir, this is very important. The management of the borrower entity took advantage of the fact that maker checker concept was not in place. Come back to maker and checker here now. You see here 11 out of 15 processes, 11 out of 15 processes are maker and checker, and banker is saying, this maker and checker is not working in our bank. And some banks, was some negligence on the part of the officers. Bank was so negligent in allowing payments in cash credit accounts without application of mind, where there was any payment made to a related business or not, and then end use and red flags. Sir, what else we need? What else we need? Bank itself is openly accepting that we don't have any kind of controls on the end use, and how best we can say, and what makes us to say here that end use of funds are have been followed in all these areas. And I think I'm able to impress upon the way in which the banks are working, the way in which we need to raise to it. Okay, come back. Having understood about this, Now, our role is to pinpoint to, number one, in all these cases, we have seen, in all the fraud cases, we have seen one and only one common thread, that is amounts are diverted to the related parties within the branch also. So we need to highlight that. Once if you are able to highlight the control weaknesses there, then we have finished our audit. Number one. Number two, if the processes is leading to multiple creation, then also we need to highlight. So that is what we have started doing it. Now let us try to find out. Now let us try to look into, or let us try to use analytics as to how we can find out the duplicate KYC, duplicate IDs. Yeah. So let me take you to So I'm writing the processes here. Why I am writing the processes is because I am giving a promise. I am making a promise in the audit report. I am making a promise in the audit report. Let me take you to that paragraphs in the audit report. I am in a lighter way making this comment. Any audit report, let it come new. Any audit report that comes as a new thing, I'll wait for the first fellow to sign the report. Once that first auditor signs the report, then automatically I take that report, convert that PDF into Word, and from there, Control A, select all, Control C, copy, Control V, paste, Control F, find the company name of the other client, find another auditor and replace on my company client name, replace my auditor name, replace current year year data, and then Control S for save and Control P for print. And so that is how I hope majority of the members accept, and that is how the audit reports are generated nowadays. And in that, look at what we are saying. I say here, I'm having professional judgment and I maintain professional skepticism throughout the audit. Come back to this example. Come back to this example here. Now, did I have professional skepticism to look at this data and raise a question that there are duplicate customer IDs? Of course, in the seminar today, 5 or 6 were quick enough to locate the deviations because they had very good professional skepticism. Now, I say I have a professional skepticism, and we also say that I am identifying and assessing the risk of material misstatement. I'm saying I am identifying and I am assessing the risk of material misstatement. Come back to this agri gold loans. Am I at every process identifying? Am I at every process identifying and assessing the risk of material misstatement at every process? Here. Am I doing it at every process? Am I identifying and assessing the risk of material misstatement at every place? Sir, we should ask our consciousness very clearly. And whether this material misstatement is due to fraud or error, when there are so many frauds coming to light, whether due to fraud, am I designing and performing my audit procedure in response to the risk? Sir, am I designing and performing an audit procedure? The audit procedure is what I am saying here. This is the audit procedure. This is the audit procedure I am writing here. Audit procedure and obtain audit evidence. Am I obtaining any audit evidence? I don't know. But I'm saying in my audit report that we also identify, and I'm saying obtain understanding of the internal controls relevant to the audit. I'm saying I am understanding the internal controls. I am understanding the internal controls. Sir, I am saying I am understanding the internal controls. Whether the statement is true consciously is what we need to ask again and again. Sir, NEFRA has started questioning these paragraphs to not to me, but to E&Y, to Deloitte, to KPMG, and so on, and highlighted and proved that their documentation is against to these statements. I think all those 5 or 6 NEFRA reports on those big 5 is available freely on the NEFRA website. You can understand the audit process. If this is a kind of regulator's approach to the chartered accountants, and then we need to look at a different way altogether from here onwards to retain the future branch bank audits. Coming back again to our analytics here, I'm taking up all these processes for finding out the risk assessment. And one such process is to find out whether in this name, like in this example, there is K Radha and Radha K. Now, whether in this database, is there a name called Abhinandan Gulecha and Gulecha Abhinandan? And is there a name called Muhammad Sirajuddin and Sirajuddin Muhammad? Like that, is there any names? If Abhinandan Gulecha name is written as AB space HI, then if I sort, all those things will come in one place. But you can look at here Abhinandan Gulecha and Gulecha Abhinandan. As per our investigation procedures, both are same. But for both, there is another, they have a different customer IDs like what it has. So for that, how do you come out? You should use fuzzy lookup. Fuzzy lookup. What this fuzzy lookup does is, if an account has A, B, C, D name, and in the same database, if you have B, D, C, A, or you have C, D, A, B, then the system will automatically, after this fuzzy lookup, will place against this name, there is a name called BDCA. There is a name. Now we have to raise and find out these, both the contents are like Radha K and K Radha. Now the professional skepticism should raise and ask whether these two, date of birth is same, photograph is same, father name is same, phone number is same, email ID is same, address is same. We should ask when once we identify this. How do we identify that? Is through this fuzzy lookup, which can be downloaded from the internet, Google, and add it to your Excel. Now you can fix this. It's very easy, and just say go. Yeah. There's some, okay, let me just do it outside. There's some problem in this. So now I'll do that process here. Fuzzy lookup, then table 1 and so on. And for 2 names, I want it for each one of it, and then say OK. Now you can see here after this, it is highlighted for Abhinandan Gulecha, there is name Abhinandan. For Abhinandan Gulecha, there is another name called Gulecha Abhinandan. Now you can see here for Gulecha Abhinandan, there is Abhinandan and so on and so on. Meaning whichever is very close, very close, then those things will automatically put it into one place here. And with this, wherever you find which are very similar, which are numbers, names are jumbled into, you can see here in these cases. So this is how you can identify if there are any serious issues. And if you find something very similar, then you need to call for their original documents of either PAN number or Aadhaar number or phone number or email ID or photograph or address or whatever it is. And then you can decide that these are all common names. And that is how we have done it for this particular case. So I said, this is one nuisance. Let's come to the another nuisance again in this. Now that is possible here. So because this is possible, we are trying to find out through a data analytics. Now next one is whether one particular name, again I am writing the processes here. Why I am writing the process here is I am saying here I am identifying the risk. I am designing and performing an audit procedure to obtain to those risks and obtain an audit evidence. So for this purpose, I have identified one phone number if it is hooked to many accounts, that can be a challenge and that can be a risk. So having realized that risk, and this risk is not identified in the risk control matrix in IFC, but I have seen it and I thought this can be a risk because in various forensic classes and in various forensic reports and in various CBI cases, we have seen that the account holders have a common address. Like in GST frauds also, we know there is a common address, there is a common phone number, there is a common Aadhaar number, there is a common PAN and so on and so on and so on. So if that is the case, if I can know for one phone number, if multiple accounts are hooked, then I can take out those accounts and see whether there is really a round tripping or there are any frauds going on a test check basis. So once I have a database like this, I just go on to the pivot table. I'm just removing this. Removing this and placing it back, and then now let's create this. So now what I want is I want phone number wise or email ID wise or address wise or PAN number wise or Aadhaar number wise or town wise, whichever is very critical. Now the critical here is phone number wise. I want names. Further, how many names are there? This will get values. I've dropped here. And now you can see. One number. The example is Abhinandan Gulecha example we have seen here. And this number has 185 accounts. Oh, is this unusual in this branch? May not be. Let us look at. There are 41 accounts to one phone number possible. Let us see, there are 28 accounts. Let us see multiple accounts to one phone number. Yeah, here you can see this phone number and 32 accounts. And similarly, you have 14 accounts to one phone number, and similarly many. But something, this 185 is something unusual, and here 114 is something unusual. So when you look at most unusual things, if you look at most unusual thing, assess the risk, what you have to do? You have to perform an audit procedure in response to those risks and obtain audit evidence to provide the basis of opinion. The basis of opinion is true and fair. Now what is the additional evidence, additional process I am doing? The additional process what I am doing here is I am taking the bank account statement of all these accounts for the current year. Procedure I am following, and pasting the accounts one below another after tagging each row of each statement with the account number, because after once I paste one below another, I will be doing sort, filter and all. When I sort it, the data will lose its originality. To bring it back again, unless I give a code, they will not come back to the real position. And that's the reason why I have given for each row one account number. Next, sort on the date wise. Now let us try this. Sort on account wise. Now you can see, if you go to the end of it, out of 17, 18 accounts I have collected, this is 759 account transaction for the full year. This is 903 account statement for full year. And this is 181 for the full year. And this is 485 for account. Many accounts are there, many entries are there in that. So after that, I'm sorting on the date. Let us sort on the date. Let us sort on the date. So once I have sorted on the date, from 485 account on 3rd April, 776 account, 25 lakhs has gone. Whether the 776 account is there in this? Yes, it is there here, 776. Okay, this 25 lakhs has come. Then what did this person has done? Somewhere when we have seen the teller time dates time stamp, now we have seen this transaction has taken place at 12:10 p.m. and 12:12 p.m. the cash is withdrawn. Okay, cash is withdrawn, no problem. And then again this, and again another 7 lakhs is withdrawn, and you can see here 14 lakhs of cash is deposited at 12:15 p.m. 14 lakhs of cash is deposited in this. The source, you know very well, within 2 minutes, it takes at least 1 minute of time for a person to get out and even count that much of cash. And the cash is withdrawn and then immediately has been put into this account. And this is a loan account, and these are all other deposit accounts of the related party, what we are saying here. Is this a nuisance? Yes, this is what I said. This is how the banks, this is how, of course, this the borrower has opened almost all the accounts in the same branch, so he could able to caught. But if they are doing it in some other branches, still you can find out. That's not an issue today, because it's not an issue, because to which bank these amounts are going, to NEFT, all these things are well documented in the bank, and through sufficient reports you can pull out. Using VLOOKUP, you can do a lot of things and identify and tell the banker that when the transaction happened and after the transaction had happened, I am sitting in your branch and identifying, detecting it. Why can't you do these processes before the transaction takes place? Meaning, If a transaction is getting initiated among the related parties, the branch manager knows it. Then what is preventing him from stopping the transaction and asking for the relevance and take appropriate documents? Because the sanction letter itself we have seen, the sanction letter itself we have seen here that they have to comply with the end use of funds. The branch managers, the credit officers, the account operators are paid for controlling the end use. They are part and parcel. And unfortunate, they are complaining the chartered accountant that he has not done that job. Unfortunate. Okay, coming back to this again, to this place here. In this, now if to this extent banks have control weaknesses, now you may ask, where should I report this? You have to report this. You have to report this under LFAR round trip. Now, is there a round tripping of funds? Where do I report? Under frauds. Now look at the question. Frauds detected, classified, but confirmation of reporting to RBI not available on the record of branch. Now, what should I write here? Should I say yes, frauds have been detected? If at all detected, I'll write yes. Can I say no? How dare I say that the frauds have not been detected? How dare I say? Or how can I say yes? If I say yes here, what is the other document I have to mention? So I can't do it. So I only have to say no. If I say no, what is the basis for me? Basis for me is I should ask as a part of audit engagement letter, I should ask all this information to them and I should bind them. That you are providing me all this information. Electronic records also you are providing. I am binding them before I enter into a contract. Before I enter into the branch, I am binding them that please give access to me. Additional informations, unrestricted access to our staff to perform this. Moreover, I am asking them to give even fraud related data also I am asking them because I have to report. Yeah, here. Access to reports, if any, relating to internal reporting on fraud. Now I am asking through a management letter. To this, management has to give a reply in management representation letter, MRL. To the extent if there are frauds, they have to say there are identified frauds. If there are no frauds, they have to say here no frauds. If they say no frauds here, then I'll go back to the LFAR and say here no frauds. If in MRL bank says, I don't know, not applicable, we are not aware, then I will write here. We have communicated to the management, branch management through our audit engagement letter, asking them to share the details of frauds, but management has refused to do or management has not responded. So I'll write here, management has not responded to our query. We are unable to express an opinion. This is the story that we need to write here. Not yes, no, all right, not applicable. And if we start writing yes, no, not applicable, not known, then the RBI is deciding, the regulators are deciding, we don't require any chartered accountant for the audit. And that's what since beginning I'm saying again and again, we need to change our reporting style so that we continue to get the audits. So coming back again, I said we have identified and we are having identified this. We go back to the internal controls. We go back to the internal controls on the documentation, and at relevant place we write, this is not captured as risk. It is not captured as risk. It is not and there are no controls on it, but there is an impact on the financial reporting. This is how the IFC report we need to draft and put it to the central statutory auditors. You're coming back again. So to this extent, we have violations and these things, and this is where we are here now. And now coming back, we have here, can this nuisance of diversions can be stopped? Can be stopped. How? This needs to be configured whenever an account is opened. If that account is having multiple links, the branch management should be able to make it as a group and link all these linked accounts to a group. And when they link all this to a linked account to a group and configure it, whenever there is an amount to transfer from one account to the another account, it should stop and ask for evidence and relevance and appropriate evidence to see that the end use is not compromised. Whether such configuration is there in process in the system, this is what I said here. Configuration controls are not effective. Mandatory field. This is not a mandatory field. And you have so many fields here. I said 18 screens has to be rolled out, and 18 screens, so many fields are created. And if so many fields are left blank and they are not mandatory, now what kind of, why are you capturing data? Why are you capturing information? Information is captured for the purpose of decision making. If information captured is giving a wrong MIS report, a wrong decision making is given. Hence, you come back to the LFAR again. Management information you need to report. You can see here whether branch has a proper system and procedure to ensure data integrity relating to all data input. All data input in 18 screens of account opening, not only 18 screens of account opening. There are more than 3,000 screens that go on for operating various activities. And in all these fields, as a part of LFAR, we need to comment here whether such data is used for MIS at corporate office level for supervisory reporting purposes. Have you come across? What answer will I write here? To write an answer here, to express an opinion here, I am providing an opinion here is yes, no, not applicable, not all right opinion I am providing here. Now, what is the evidence I have obtained to say here, yes, no, all right? Now, what is the audit procedure did I perform for writing yes, no, all right here? Is what our consciousness should decide before writing yes, no, not applicable. Not only that, you also have to report on KYC. We have seen what KYC is. We have seen on fraud. We have seen on, we'll come back to early warning signals. So this is what, now you can see so much is left blank. So much is left blank. If it is not applicable, my dear members, I hope you remember, you relate the last 1 week's tax filings, wherever the amounts are not filled in, that will automatically put it as a 0. Now, wherever you are not filling anything, Is the system blocking it once and for all so that on a later date you don't fill in anything? Or can you say here it is not applicable? No, nothing is bothered. And this is how all the public sector banks and banks in India are working on 232 lakh crores of Indian economy. 200 lakh crores of funds are routed into the banking system, and that banking system has these kind of weaknesses. And these kind of weaknesses, we say true and fair, no more weaknesses. We don't need any branch audits. Hence, we need to spend good amount of time and carry out the processes. And so much is there. My energy is not permitting me to move on further. I beg your pardon to break, and then if some other time we can meet and continue. I'll just share this. I'll share these document, and I have been talking about the same things again and again in the same platform. So those videos are there. I'll share with these things. Thank you very much for your patient listening.
Thank you very much, sir. So this is CA Neeraj Hadodia, member ACI Study Circle.
Yes.
Our convener, CA Vivek Agarwal, left for some important meeting. So definitely the way in detailed and in a practical manner, you have given your presentation. You have given practical solutions. So definitely that is going to help all of us. So can we take one or two questions, sir, if you allow?
Yes, sir. Yeah. Sure.
Okay. So if any participant has any question, if you can just write on chat box, or you want to ask, so we can unmute you. Please raise your hand. Anyone? Priyank, just see anyone is there who is want to ask any question.
No one has raised their hands. I request the participants, if anyone has a question, you can unmute yourself and then ask. In the meanwhile, sir, if I can take the liberty, I would like to ask, sir, what should be probably the first 2 or 3 steps, when we start a bank branch audit, what should be the first 2 or 3 steps, to conduct a successful bank audit? How should we proceed with that?
I'll share that.
Yeah.
So first thing is let me just. First thing is, the moment you get an appointment letter, celebrate Holi, Diwali, everything, distribute sweets, then you send this audit engagement letter.
Right.
And this audit engagement letter should contain what is the documents you require. Like these are all, there are 96 pieces of information given here. Unless you get this 96 pieces of information, I cannot dare to say in this that I have obtained all the informations and explanations here.
Right.
I can't dare to say here. If I have to say this here, then I need to collect this information. And collect this information and put it into a tracker. Audit control sheet. And these are all that 96 pieces of information. Put it into a track. And I am saying why I need this. Why I need this information. Because to report in LFR. And okay, which assistant will carry out this? I can't go singly to a bank audit. I am not a sannyasi to travel to Himalayas alone. It is a branch, it is an audit. I need to go as a gang. Why? I am also saying in the audit report that I am complying with the quality standards. One of the quality standards says if one chartered accountant carries out a work, the another chartered accountant has to review it. It is mandatory requirement. And I am saying this in my audit report. And that's the reason why proprietary firms who doesn't have a chartered accountant assistant, they are not getting these bank audits. So please understand it's a teamwork. Now, when I say that I have complied, now I should allocate some work to him. Now, yes, I have allocated to some CA here. Now, bank, he has collected the data. I have reviewed the data. Just, yeah. Now, I'm writing here, I have read this data and I've highlighted some issues here like party unit, like concurrent auditor has commented, and I've written all these comments and I've asked the banker to reply as an audit note. And why audit note? Because I'm complying with SA 265, those charged with governance. Again, come back here. I'm saying here that we communicate with those charged with governance. I'm writing here. And I'm planning here. All this is planning. And I'm saying here, we have planned our audit scope. I'm saying here, and the evidence for this is this page sheet. And the evidence for this is this audit note. And I'm writing here. And I'm taking the management reply. And I'm evaluating the management reply. And if management reply, what I have evaluated, still I am not satisfied. As Sonawalla sir was also saying that he was not satisfied with the branch manager's opinion and gone ahead and classifying it. Yes, if any of those comments are not satisfied, all that observations will boil down to 12 major significant issues which will impact material misstatement. Any observation you take, if it is relevant, it will fall into any of these 12, and I'm tracking any of those 12 to each of the observation. And whether this observation has a link to the LFAR, which point of LFAR I should link. Moreover, now is there an annexure? Why annexure? Come back here. I'm saying I have taken the evidence. This evidence, what I'm saying here, is an annexure. Whether this point also has a relevance in MOC, relevance in IFC, relevance in LFR, relevance in Goshen Jilani Committee, relevance in any of the 38 statements or certificates that I gave? If so, I have to link all that here, because this 96 pieces of information has some more relevance in almost all of our reportings. And this is a planning. As you said, as you have asked me, what are the things that we need to do? Number one, you need to have this integrated sheet and put this integrated sheet into the Google Sheet. I'm demonstrating it. This is not a theory. This is a practical thing that we have followed. You can see this is edited last April 2021 for one of our bank audit, for one of our branch audit. And you can see control sheet here, which branch, which partner, what was there, and content control. And these are all the checklist, quick checklist, what activities you need to do. You need to make this, as you're asking about what is the first thing I should do. You should take this sheet before you go there. Appointment letter from bank, who has done it? Who has reviewed it? No objection from retirement, have you done it? Audit engagement letter, who has done it? Branch audit report, who has signed it? And so on and so on and so on. Team, who is the team? Who is the partner? How many days they have gone? Branch info, and so on and so on and so on. This is an integrated, and you can see here, this sheet is hooked up to 5 people who worked on this branch. Remember this branch fees, the branch has paid us 3 lakhs of fees and 5 people have worked. And you have seen here the team size and how many man days. The man days is 21 man days. But I'm sorry to say again, in some of the cases, one chartered accountant is going alone and he wants to take all that 5 lakhs or 3 lakhs of fees alone. He wants to enjoy it. And that's the reason why today, because of few chartered accountants who are very greedy about these things, the total profession is getting affected today. And we all need to stand against it and educate them and see that we don't fall into these kind of things. So come back again. The question that you have asked me is, what is the first thing? First thing, audit engagement letter. Number 2, a detailed, integrated a detailed integrated worksheet like this. Last year also, when I've taken it, the branch has asked me, I have given it, I have shared this working paper. I've shared with various auditing, I've shared with indexes, self-index. And this index has what are all the files you need to take. If it is Finacle, what files you need to take. If it is banks, what files you need to take. How much you have to take, what time you have to take. All the procedures are written in this, and this has been circulated for the past 2 years to your branch. I don't know how many of them are really using it. I hope you got the answer for it.
So just one small question, a follow-up question actually. So as you mentioned that there are 96 things that we should get from the branch, right?
Yeah.
Practically, sir, do we get all the 96? And if not, then how should we?
If you don't get it, the relevant place you write information not made available. I am unable to express opinion.
Okay.
Because for each piece of information, you are saying where to report, why you are collecting this nonsense. If there is anything here, you write it. If they have not provided, you can see here whether you have provided or not. If they are not provided, you have every right to disclaim. No one will force you to give a plain report. Yeah.
So last question for the day. Ms. Smriti has asked what additional qualifications we need to gain as much knowledge about CBS data extraction.
See, data extraction is you're asking for the reports, and those reports I have already mentioned here in this. So if you get those reports, you carry out the analytics and do it. If reports are not made available, you simply disclaim. And thanks to the pandemic, for the last 2 years, they are supplying data over the emails. They are supplying it. But however, I can demonstrate I am able to collect the data right from the year 2000 onwards, where even complete CBS was not there. From that time onwards, I am collecting data. I can demonstrate right from 2000 onwards. To put it in a very lighter way, this getting data is not a science, it is an art of getting things done. Art means probably I will do a Kathak dance there, they will give. Probably you may have to do a Bharatanatyam dance so that they are impressed and giving it. In a lighter way, I say.
Neeraj bhaiya, over to you.
Yeah. So thank you very much, sir, for your precious time in this busy season of March closing and all. And we all are very much aware that how big challenge this year for this bank audit and all. And you have covered this entire subject in detail. And sir, Mrs. Smriti definitely will get all the sheets or PPTs from our speaker. So definitely we will share that with all of you. And sir, on behalf of ACA, we are really thankful to you and Mr. Sonawalla as well. And we all are aware that in this virtual mode, so physically if we are there, so we will definitely share a token of love with you. But today we are sharing this e-memento with you. We will definitely share the same on your email ID so that you can keep as a memory. Premnath sir, we are aware that every year in this season, you are there to give your practical solutions, practical approach, how to go about everything, and that also with use of technology. Mr. Sonawalla, we are also very much thankful to you for your time, for your deliberation in detail. And on behalf of ACA, we are also thankful to all our participants, those who have attended for 2 days, this session you have attended. And definitely, we all have gained knowledge that how we have to execute the same. We also request you to be associated with us through our social media platforms, through our website, through our YouTube channel. And this seminars is already live on YouTube. So if any of your friends would like to go through the same, please use the same. And also we'll request you to become member of ACA. Based on your request, we will definitely share our membership form. So with this, we are closing this session. Happy March ending, happy starting of bank audit. So thank you very much and wishing you all the best that everyone of who is attending this session must get branch audit.
Yeah.
So we are concluding this 2 days seminar on bank audit. So thank you. Thanks again. Thank you,
Thank
sir.
you. Thank you.
Thank you so much, Premnath sir. Thank you.
Thank you. Thank you, Sonawalla sir.